Good morning out there, and welcome to Traders Corner's Memorial Day special event.
Testing 1 2 1 2 everyone. I want to welcome everyone, and we're having a little bit of a technical issue. So I'm not hearing Rob. This is Leigh Goldstein from 10-Minute Trades. I'm not hearing Rob from Traders Corner, and I'm not able to show my screens, I don't believe. So if you could bear with us for a minute, we just have to work this out, but we definitely will be starting in a minute. So hang on tight, please.
Hey Leigh, can you hear me now?
So folks, bear with me. I'm going to have to reboot because I'm not able to get my screens to work properly. I don't know if anybody can hear me now, but I will be back in 1 minute. Okay, I'm just going to reboot because the technology is not working on my end, and I think if I reboot my webinar, I'll be right back. So don't go anywhere, anyone. With just a little bit of a technical issue, we'll be right back. Okay,
We'll see you in a second, Leigh. I'll try to keep
and
them
I
busy.
apologize.
With that said, good morning, everybody, and welcome to Traders Corner's Memorial Day special event. Memorial Day is a day to honor all American veterans who gave their lives as sacrifice to our nation. So we want to take a moment to remember them and thank them for their service and sacrifice. God bless you and your families. With that being said, on our panel today, we've handpicked some professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to learn a wide range of topics from mastering technical analysis for successful day trading to how to leverage artificial intelligence into an automated strategy. So the fact that Leigh had to reboot himself, I'm going to go ahead and open up the floor and ask if anyone would like to ask me a question and see what kind of answer I could give you while he gets his computer back up and takes over when he gets present again. Is anybody else out there a vet? Things like that. Does anybody want to talk about futures or stocks and options, or pop a question at me that I could give you somewhat of a veteran opinion on?
Hey, Rob, can you hear me?
I can hear you. Can you hear me?
Yes, if you can give me control of the screen, I think I should be okay.
Well, you're organizer and presenter now.
So I should be ready in 1 second. Sorry. Okay. I
Things
think
look
everyone
good.
should now be able to hear me.
Loud and clear, and your
And if you
screen's
want to
up
give
full
me a
screen.
heads up, folks, that you can hear me and I should be able to see your questions. I apologize for the delay. And Rob, for some reason, when you make me the organizer, I'm not able to hear you. So I'm gonna just get started, okay? Rather than you introduce me. So I wanna thank everybody for being patient, and everyone's saying they can see my screens. So we're gonna get started. My name is Leigh Goldstein. I'm from 10-Minute Trades, and I always am very appreciative of Traders Corner for having me on. They're so kind to our company and have been for so many years. It's always a pleasure to present to a great audience that we always get with Traders Corner. So thanks for your patience. You know, every now and then technology is a little crazy. You know, and if you think about it, the technology is sometimes our friend and sometimes it's our enemy when we're trading. And, you know, one of the great things about what we do as a company, 10-Minute Trades, is we try to use as much technology as possible to help us reduce all of the errors, all the problems, anxiety. And that's one of the issues that I'm going to be talking about in today's webinar. It's a holiday weekend. I'm always surprised there's so many people available on the holiday weekends, but I, for one, I'm not a big traveler on the holidays. I'm glad to hang out and chill at home and relax. So it's a great time to have a webinar. So thanks again for joining me. Let me get going. This is our company. I'm Leigh Goldstein on the right. I'm also a songwriter. One of our partners in the company, Eric Roth on the left. We're the two main people that run the company, and we have also a team of people behind the scenes that help us. And of course, the disclaimer, I'm not a financial advisor. Everything we discuss is for educational purposes. It is possible, believe it or not, to lose money trading futures, so trade carefully. And, you know, just be smart about what you do. So, you know, the current markets, the world is a very scary place. There's a lot of fear and hype about recession. There's a war. You know, the Fed is raising rates. People are worried. Inflation is not quite under control. One of the great things about our system is we don't really get that significantly affected by all of the longer term trending issues in the world and in the market. And that's because essentially we're trading events at an exact moment in time that we know is going to move the market. And our system tends to be benign in relation to the way the markets are. And what do I mean by that? We could have a day where the market's up 400 points, and we could have an Apple earnings trade that we're going to trade. It's almost a definite that Apple's earnings are still going to move the market, that we have decided is smart to trade when they release their earnings. So it doesn't really matter if Apple was downgraded. It doesn't matter if the Apple stock is splitting. All of those things don't really affect what we do, because we're trading, as I said, at an exact moment in time when we have done the research to determine that the market's going to move on an event. We call it appointment-based trading. It's a simple time-based approach to the market. Appointment-based trading, or ABT, we like to call it. You know, it's a fancy way of also calling it news trading. We're trading the news. I mean, we're trading markets that are moving when there are big time earnings reports. We're trading GDP, job reports, all of the events that you would expect would move the market. We have designed a way to trade those events exactly at the moment that they take place. We trade those events in our trade room, and we also have something called family money trades, and I'll get to that in a second. We use the major economic event calendars to find our trades and to backtest our trades. So it's not really complicated what we do. We will go to, for instance, forexfactory.com. Everybody out there, if you don't know what Forex Factory is, you should make it a part of your everyday routine, because even if you're a discretionary trader, if you know what's going on that day in the market, you could keep yourself safe. Because let's say just on a random day next week, for instance, you could be in the market trading gold, or you could be in the market trading oil. And if you don't know what's going on in the market and you're in an oil trade, if you happen to be in an oil trade at 10:30 in the morning on Thursday, right, of next week, you could wind up getting your trade blown out of the water, because Thursday of next week at 10:30, crude oil inventories are being released. Sorry, next week it's 11. And that's another interesting thing. Next week it's a day late because of Memorial Day holiday, and it's also half an hour late. So if you don't check the calendars before you put on even a discretionary trade, a move in the market that you didn't realize was going to take place could ruin your trade. So that's a very important reason, number one, why you want to pay attention to the calendars. The big calendars that we like are Forex Factory. We love investing.com as well. Some folks like FX Street. Investing.com has some very interesting features, and I'll show you. One of the things that we love about investing.com is when you're on the news, the exact news that's taking place, for instance, what you do is when you log into investing.com, you just click on news at the top and economic calendar, and then you can scroll down and you can see all the various events that are coming up for that week. So for instance, this week is a very interesting week. On Friday, we have one of the biggest reports of the month, which is the US jobs report. It always, and I never use the word always with trading, it always moves the market. It's an 8:30 a.m. trade, okay? And you can be pretty well assured it's going to move gold, it's going to move oil, it's going to move the euro. You name the index, you name the instrument, the US jobs report is going to move it. We use these calendars to help us find the events. We then back test the events. But what I was telling you is one of the great features of investing.com is at the moment the event takes place, they print the news on their website as you're watching it without having to refresh or press any buttons. So if you're in a trade, because we sometimes trade at the exact moment that the news comes out, if you're in a trade, you'll actually see the news result, and seeing the news result can help you determine whether you're going to stay in the trade if you haven't been filled on all your targets, if you want to get out of a trade because the news is against the way that you're trading. So what do I even mean by that? The news is against the way you're trading. So let's say, for instance, you're trading a natural gas report. And so what are they looking at when you trade a natural gas report? They're looking at how much storage, how much natural gas is available in the storage. In other words, they measure it by cubic feet. So if there's more natural gas available than expected, keep in mind, more natural gas, there's too much, that might push the price down. If there's less natural gas in the market, that might push the price up. So for instance, last week, we were trading natural gas in our trade room. And this is one of the few trades I'm going to show you where we didn't actually use real money. And there's a reason why we're not using real money on natural gas. And this is a very important issue to understand if you want to be involved with us. And I'll get into the elements that make up our system. But one of the most important elements in our system is the DMM, the Daily Market Mover. It's a report that gives us information on the reports that we're trading. The natural gas report has 6 weeks of recent trades. It's got information on how the report has been moving. Last week, it spiked 112 ticks. Well, that's very, very useful information for us to know. And if you look at this little section here in the Daily Market Mover, this is like a journal. It's a coin toss. You could see that the last 6 natural gas trades are only 3 winners and 2 losers and a dull. So that's not a great trade to trade right now, not a great report. I want better than 50% profitability on most reports. So we just weren't trading natural gas live because we're waiting it to start performing better. There's so many reports, folks, that you don't have to trade the bad ones. If you can keep control of your emotions and your tendency to overtrade, if you can control yourself, I don't have to tell you that that's one of the most important things that will help you to become a profitable trader. One of the worst habits that traders do is they overtrade. They trade too often. They trade when they shouldn't. Natural gas on Wednesday, if you look closely, there's going to be an explosion in price when the news comes out. Now, it's hard to see the right-hand bottom of my screen, but what it's showing is investing.com on the natural gas news, and it actually shows me if there was more or less natural gas available than what was expected. This particular week, watch what happens when the news comes out, because this is a very common occurrence, especially on the natural gas report. What happens, you'll see the clock is going to start ticking. What happens is the news comes out and then there's an explosion because the news result caused this big move in natural gas, creating that large candle. Now, what happened last week, it was an unsafe, very quick move, and it wasn't possible to have a very good profit. It would have been a losing report last week. So keep in mind, we looked at our daily report. That kept us from trading natural gas live, and we didn't lose money. So let me just backtrack and go through and start from the beginning. We use the major economic event calendars to backtest and find our trades. So of course, the first thing we want to do is create a weekly schedule. Those events are based on trade triggers. Trade trigger is the actual event. Natural gas storage, jobs report, GDP. Those are trade triggers. The ones that we're interested in are the ones that have the highest probability of moving the market. And that means they also have the highest probability of giving us a successful trade. The keys to our system. So let me remind everybody why I'm here. 10-minute trades. We are trading on a schedule. We are trading when we determine it's safe. We're not sitting in front of our computers for hours. That's the whole point to the way that we trade. The first key is we call it the WMM, the weekly market mover. This is our weekly schedule. We send it to our members every Sunday. So we know in advance every week all of the trades that we're going to be, all the events we're going to be looking at possibly trading. And this also has our trade room schedule. If you notice, it says the room opens. Our first trade room last week was Tuesday at 9:15 in the morning for Flash Manufacturing Services. We stayed in the room for new home sales. We traded NVIDIA earnings, API crude report, et cetera, down the line. And we finished yesterday morning with revised University of Michigan. So the first step in our system to trading events is the weekly market mover. And I just showed you an example, and I'll show you next week's, because next week is very interesting. I think next week's going to be a great week because there's some real fantastic possibilities. We've got 3 family money trades. So what is a family money trade? A family money trade is the best of the best reports that we can trade. So in other words, if a report has 5 out of 6 of the past month's winners, even 4 out of 6, that would qualify it as a family money trade. We have the ADP report, very, very popular report that's a day late also because of the holiday. That's Thursday. We have the ISM manufacturing news report also on Thursday, and the Friday jobs report. Those are family money trades. That means that in all of our setups, they have the highest probability of being a successful trade based on the way that they have been recently trading. What's interesting too is some of these reports we've been trading for years. I've been with 10-minute trades for about 7 years, and some of these reports we've been trading as long as I've been here. Obviously, there's plenty of new reports also. Chinese Kaishan manufacturing, we never used to trade that years ago. Also Chinese manufacturing, non-manufacturing, Australia CPI. There's always new and exciting reports that get added, just as there's also reports that disappear because markets change. Elements that make a report very impactful also can change. So it's also possible that a report that was super fantastic has now become dull and we don't trade it anymore. Okay, so the keys to the system. The weekly market mover is our weekly schedule. Then the second step is the day before an event is going to take place, we send our members a DMM, the daily market mover. And I apologize, my slides are just off the wall today. A daily market mover is a report that helps tell everybody that's a member how we're going to trade the event. So for instance, last week we had an oil report. We have an oil report pretty much every Wednesday. So every Tuesday, our members receive in their email, or they can download it from our website, a DMM, and the DMM shows them exactly how we're going to trade the report with some caveats. The caveats are sometimes markets can be so volatile, right, that at the last minute we might change settings. Maybe there was a tweet that the Fed chairman made a comment minutes before we were taking a trade. So it's very important to be aware of what's going on around you and understanding that the DMM is the first step in how to trade a report. More often than not, there are minor tweaks we make to the DMMs, but overall, they can be traded as is as well. So on Tuesdays, our members receive the DMM for the crude oil storage report, and you'll notice oil has 2 winners in a row as of 5/3. This was 5/10, May 10th report, and actually oil has all of a sudden started trading very well. It's had 4 winning weeks in a row in our setup, and our setup has a journal the last 6 weeks, and then the yellow line that we were looking at, and I'll show it to you again, 1 second. That yellow line is the actual trade setup that we use. We bracket the market above and below the current price with 12 ticks. We have a certain activation time that we use because we have software. That's also part of our important elements. And then we have suggested targets and stops. And that's how we set up a trade. What do I mean by bracketing the market? Very simple concept. If you notice here, this candle would represent the current price. And then you have a sell stop and a buy stop. When the news comes out, it will burst up or down under normal circumstances and will get pulled in the market long or short. And that's what we call a breakout trade. It's a trade that uses brackets. We also have reversal trades, and we do earnings trades using futures. We have something we call a trap trade, which is a specialized type of a reversal trade. We have quite a few different setups that our software makes available. So let me show you. I'm not sure if I pulled the most recent oil trade. Give me 2 seconds. I'll just see if I have the oil trade handy. If not, I'm a little bit worried about my charts. One of the problems I had technology coming in here is it seemed like there was a slight delay. So let's see if my videos are working properly. I hope they are. So every Tuesday, there's an oil report called the API report. It's not the same data set as we experience on a Wednesday. Wednesday, the oil report is at 10:30. What's interesting is this has been a report that has not been performing very well. But last week, it actually surprised us. And I'll give you an idea of one of the setups that we use. And hopefully I can tell that my videos, unfortunately, are not working properly. They're a little bit slow. So what happens in this report is we actually have a type of setup called a range trade. What a range trade does is it looks at time. If you see these lines on the chart, we can set up a range based on time. And what that means is, so for instance, if you want to trade the ES after 10 o'clock in the morning, but starting at 9:30, you can use our software to set up a trade that allows you to trade that range between 9:30 and 10. You can trade the breakout up or the breakdown short of that range. Our oil trade does a very similar thing. It creates a range, and then we can put orders above the range or below the range. And when the news comes out, it fills us one way or the other. This day, last Tuesday, it burst up and it filled us to the long side, and it wound up hitting both of our targets. As you could see, the price moved up and it kept moving up. It was quite an amazing after hours trade because it wound up testing the high of the day. Over 40 ticks of movement on oil, 4:30 p.m. Eastern time is a very unusual move. But we were there, and that's one of the trades that we look at to try and grab profit. Now, ironically, that particular report has not been behaving well, so we weren't trading it live. But just want to give you an idea of some of the elements that make up our system. So the daily market mover, we released a report the day before that particular news event was released. We had a trade set up on the charts ready to go. And for people that traded it, that was a very profitable traded report. Now, here's another recent daily market report. I showed you the oil report. This week's schedule, as I showed you, is very interesting. So we've got some very good moving events coming up this week. And one of them that's been a big report has been not CPI, but ADP, the ADP report, which is a specialized jobs report. I'll give my videos another shot to see if I could show you the most recent ADP report. So ADP is a report that we trade with gold. It's a job type report and comes out at 8:15 in the morning. And a couple of seconds before 8:15, what'll happen is you'll see these little X's on the chart. Those little X's represent the orders where we are going to place our orders that are live. This is a live real money screen. And it is unfortunate, my charts are moving so slowly, and I would have to reboot everything to make this work perfectly, folks. So I'm going to just move through it manually. There's the X's. Those X's are orders. There was the news being released. It shoots down, fills my targets, both of them. That was a $340 trade, and it's 1 second. That's how long I was in the market. That's last month's ADP report, trading gold. That report is on our schedule coming up this Thursday. That's a family money trade. So what does that mean? A family money trade, as I said before, it's a trade that consistently has been making money for us month after month. Now, it doesn't mean it's 100%. No event trades profitably 100% of the time, but the ADP report is more than a 70% profitable report. It's definitely one that no matter what's going on in the market or in the world, it is a report that I will always be willing to trade it live. So we've got two elements that we've covered that are very important. We've got the WMM, our weekly schedule, that gives us our trade room schedule, and it gives us a schedule of all the events we're going to be looking at, and our trade room schedule. And the number 3 most important element is our software. Our software is JOBB. We call it version 10. It is an add-on strategy. It's actually 2 strategies that are for NinjaTrader. We would recommend NinjaTrader 8 these days because they're not supporting NinjaTrader 7 anymore. And our software semi-automates the trades. Sometimes a trade will be 100% automated. Sometimes you don't want to automate a trade, because think about it. We do earnings trades with our software. And for instance, we'll be trading Apple. Okay, so we trade the NQ on Apple earnings. We know that Apple, because we do so much back testing and a lot of research, we know that Apple's going to release their earnings on a regular schedule every quarter. I would say 90% of the time. So we can set up our software to do an automated trade that could be 100% automated. Apple usually releases their earnings at 4:30. If you notice here on my NinjaTrader charts, I have a NinjaTrader multi-broker license. I'm actually looking at the Apple stock price, but I'm trading the NQ futures. Again, we're not trading stocks, we're not trading options, we're trading futures with NinjaTrader, and we're using version 8 of NinjaTrader because we know that the events that we trade, they're going to move certain instruments in the futures markets. And we know for sure, we've been trading Apple for years. I know when Apple releases their earnings, watch what's going to happen. Apple's earnings are going to make the NQ literally explode. It's going to burst this past month, it was like 2 weeks ago, Apple released their earnings. The NQ bursts to the upside. And it is a shame. I said before, my charts are slow. I can't speed them up. But you'll see it's kind of funny that it's in slow motion. It's going to burst up. And when this trade is over, it's only a second that it took, maybe 2 or 3. What's interesting is you see the stock actually gapped up. I'm watching the actual stock price on the right as one of the tools that helps us trade. The NQ you could see is bursting up. Trust me, it happened much faster. It finished bursting up. I had a $735 profit. Literally, I would say that was about 4 seconds. That was a 4-second trade. So we can trade special earnings reports. If the stock that we're trading for earnings will move an instrument well enough, then it will fit our bill for trading earnings. And one of the more interesting new earnings trades that we took this quarter was Home Depot. So we did a little bit of extra research, and I looked at the YM, and I noticed that Home Depot, it doesn't move the NQ. It's not an NQ stock, right? Home Depot moves the YM. So let's see, do I have, yes, this was our Home Depot video. Now, we suffered a lot of pain to trade Home Depot. You had to get up at 5:40 in the morning Eastern time to take advantage of Home Depot's earnings because they released their earnings at 6 a.m. Okay. Now, if you notice, one of the setups we have is called a range trade. I mentioned that before. We have breakout trades, reversal trades, earning trades, time-based zone trades, but they're not hard to learn. It only takes, I would say, a couple of weeks for someone to get up and going with our software and to start trading, especially if they're experienced. The range trade creates a range in time. So I knew from the research, Home Depot was going to release their earnings real close to 6 a.m. They were going to be one of the trades that we love. We knew that they were going to be on time with their earnings, and they were. So we created a range, and what a range trade does is when the range is over, we put our orders on the chart. And then when the earnings come out, we expect that the range will get broken and we will get pulled into the market. I was pulled into the market short when Home Depot released their terrible earnings, and the trade was over in about 20 seconds. That was a YM $250 profit, 6 in the morning. That was worth getting up for, in my opinion. Okay. Absolutely worth getting up for. Now, I will answer every question that I see, so I'll stop in time, okay? So that's our third element. Our software allows you to trade discretionary if you want, but the main thing that it does is it can automate the entries in our trades. It allows you to adjust your trades. The key is it puts the orders on the chart, the brackets, so that you're not fumbling around 1 second before the news comes out. It does the hard work for you so you can concentrate on the trade. It helps to reduce your inconsistency, your anxiety. It helps to reduce your fear because the trade's going to take place when you tell it to. You're not sitting there worried if you're making the right decision. It's already set in advance that you're going to take that trade. It will help to reduce your errors. You're not going to hesitate because you've timed your entry. It's less overwhelming and it makes things simpler, and it just is a better way to trade. And then finally, the most important, I think the best element of everything we do is our trade room. Absolutely everything takes place in the trade room. We go over the software, how to set it up. We talk about any changes you might want to make to the report that we're going to trade. Everything that's important before a trade, we are constantly going over in the trade room. And that's the, a key element, a community of people that care, that share ideas. The trade room, as everybody knows, you've all been in trade rooms. Last second setup changes, extra setups for trade room members, earnings workshops and trading, constant education in the trade room. I can't say more good things about a good trade room, and we've all been in good trade rooms. I can think of quite a few where people are sharing information, educating, and teaching how to trade as well as humanly possible using the particular system they're covering in the trade room. I want to show you some actual screenshots. I can't believe how fast the time is going. Our members are always sending us screenshots. We've had an awesome 3 weeks. News trading has really been fabulous. And a lot of members that have never sent us screens have been sending us screens. One of our members, Eva from New York, traded United States retail sales, $320 profit. That was about a 3-second trade. And I'm leaning towards showing you screens because my videos are so troublesome. One of our traders, I'm not going to say who he is, he's a fairly famous actor, and I didn't know. Lawrence A, he traded NVIDIA profits, $597, and he was trading in his prop account with Apex. Now, certain prop accounts are better than others. You have to be careful, just if people want to know. The prop accounts don't love bracket trades because they have their own, their own data feeds. And some of the prop account data feeds are slower than live data feeds. So we do have members trading prop accounts, but there are certain companies that are better than others. Just keep that in mind. Another report, profits, $343 on CPI. CPI is one of the most difficult trades to trade. Difficult reports. Everybody knows how seriously the market is looking at that event. It's a very volatile event. It's an event that the brokers actually raise margins on because they're worried that people are going to have problems trading it. Our software does a really good job of dealing with high volatility situations, because remember, we are putting our orders on the chart automatically. So let me see if this screen will work. So this was a fairly recent CPI report, and you could see, you're going to see X's. The X's will show up on the screen. There's the X's. Those are our actual orders. Then the price shoots through those orders and fills us. And that's when we make our profit. That was a successful CPI report. I have, and look, every single trade isn't a winner, of course. Just to give you an idea, this was a trade that didn't work. We trade Australia's CPI. And if you notice, there's a candle that's going to wind up going up and down. So when a trade doesn't work, what could happen is it might go up and fill you long, and then it'll change direction and take you out of the trade short. And that's exactly what happened in this Australia trade. So that was a trade that didn't work because the market didn't cooperate with us. Earnings trades have been some of our best trades over the past quarter. We had really good earnings trades. This week coming, we have the US jobs report coming up. That's a family money trade. US jobs last May was a great report. I was trading bonds on the left. People were trading gold on the right. Bonds shoot down on this report. You could see that gold explodes to the downside. People made quite a bit of money on gold trading the NFP, it's called, non-farm payrolls, US jobs report, and I made money trading bonds. Our software, remember, it puts the orders on the chart so you don't have to fumble around right before the news is released, and then boom, the price explodes, pulls us into the trade, and sometimes the trades are over in a matter of seconds. It's amazing the way the software works. And I have literally hundreds and hundreds of screens from our members. I've got members trading micros on some of these reports. One of our members, and this is a fantastic thing that happened. A member made over $50 trading micros on our NVIDIA trade. $50 on micros when it's 50 cents a tick is a very big winning trade. So you can trade micros, you can trade full size contracts. We have setups that work with just one contract. You could trade many contracts if you want to. There's no limit except what you're allowed to trade by the amount of margin that your broker requires. So those are the main elements. And let me show you what our Memorial Day offer is for this weekend. We have a deal that I think is incredible. $299, 3 months of everything that makes up our membership. The DMM daily trade reports, our JOBB software, the trade room, the weekly schedule, www.getjobbnow.com. Our sale ends Memorial Day. I promise you these prices are fabulous. It's not an automated price that's going to reoccur. It's 3 months, software, DMMs, trade room, nothing held back. You'll be able to take part in the next earnings trades, which is a whole system that we often sell separately for more than $299. And it's a fantastic deal for the holiday. It expires Memorial Day. How do you get coaching and support? Just a couple of quick questions for everyone. We do all of our coaching live in the trade room. Other members help out also in the room. And you can always email us, help@10minutetrades.com. The deal ends Memorial Day. One-time investment, no auto renewal, $299, 3 months in the trade room, 3 months of software, 3 months of DMM, www.getjobbnow.com. If you're already a member, it's a fantastic way to just add it to your existing membership. You're allowed to do it. Obviously, we love our members. We never don't allow a current member to take advantage of a sale. We bend over backwards for our members. I think everybody that is in this room and knows how hard we work so that you could learn how to do this. The most important thing, in my opinion, is learning how to do this so you could make it your own. You don't have to ultimately just follow me. The people that do the best are the traders that learn how to use the tools and trade the news smart and outside the box on their own. Besides following me, our members design their own trades with our software. It's an absolutely fabulous system, should be part of every trader's arsenal. A great way to trade on your own schedule, not sitting in front of your computer all day long. $299, www.getjobbnow.com. A couple of quick questions, I'll get out of here, Rob. What's the advantage of Ninja rather than TradeStation or Tastyworks, which claims to be the fastest? Lawrence, it's all just an issue of our software works with the Ninja Trader. Unfortunately, Tastyworks, they do not yet allow for third-party companies to integrate a strategy into their platform. If they did, and if they do, we will write our software for their platform. TradeStation, their data feed, in my opinion, tends to be a little bit slow. We've actually looked at TradeStation. I like TradeStation. Maybe one day we'll write for it. It's possible. If you have no experience with futures, someone is asking, what if you have no experience? So Peter, we have tons of educational materials, we have videos, and you're getting time in the trade room. The key is, how do you learn the best? By doing and practicing. Just by coming into the trade room, in a week, you'll be so far more knowledgeable than you were when you first started. We answer questions, we don't leave beginners behind. And very honestly, I would say you learn really well by coming into the room, watching and practicing. All right, so folks, I don't want to go any longer. There were a couple of technical glitches this morning. Thanks everybody so much for your patience. Rob, I'm not sure that I'm going to be able to hear you for whatever reason. Still having some technology issues. I thank everybody. www.getjobbnow.com. And I'm obviously going to not close the webinar. I will make sure of that. So thanks everybody for listening. And I hope you all have an awesome Memorial Day holiday.
Thank you, Leigh. Every time I hear your presentation, I love it even more. Those brackets are awesome, and it's fascinating how you trade futures by using earnings reports on stocks as a catalyst to drive the price up or down and leverage your software to automatically enter a trade on the right side of the market via your proprietary bracket strategy. Incredible. Thank you for joining us today, Leigh. Thank you so much for making such a generous offer to our audience as well. Ladies and gentlemen, that was Mr. Leigh Goldstein of 10-Minute Trades, and you can learn more by clicking on the link I put in the chat box or going to 10minutetrades.com. Leigh, we hope you have a good holiday weekend, and we hope to see you back. Ladies and gentlemen, I mentioned at the top of the show, we had a great lineup on our panel today, and our next presenter is no exception. He's been trading futures for more than 10 years. He now educates traders on becoming consistent using the BuySide Global suite of products. His software algorithms track institutional traders as they change their bids and offers and deliver real-time buy and sell signals on time-tested strategies. BuySide Global's been a proud vendor of NinjaTrader since 2015. Here to present how to effectively trade on choppy sessions is Mr. David Gear of BuySide Global. Welcome back to Traders Corner, Dave.
Thank you, Rob. Thank you, Rob. Appreciate your time and appreciate everybody being here today. And we're keenly aware of your time and going to make the most of it. Also, a big shout out to Leigh again. We always love, I never miss one of these because even if we're not presenting, there's so much information. And my heart goes out to Leigh a little bit, that those technical difficulties that we've had before. And so again, thanks, Rob. You can hear me okay? And it looks like
I have to say, I'm just happy that you seem to be able to hear me and I can hear and see you. Your screen's up. And feel free to take it away. I'll give you a polite reminder in the admin chat when you got about 5 minutes left.
Yeah, absolutely. Absolutely. So thank you guys, everybody, for being here. So yeah, we just get to it. So we got a lot of stuff to cover, and thanks everybody for being here. Again, I'm Dave Gear, lead trader here at BuySide Global. So I'm going to make this as informative as I can. And also there's a freebie in the middle here, and then there's a great offer, literally the best offer I've seen us offer at the end. So make it worth your time. Stick around. So of course we got to get through our disclaimer. Please understand trading's risky. We have a moral and a legal obligation. I think the legal obligation's not as important as even the moral obligation because of its you just need to know trading is risky. And if you don't know that by now, that's something people learn quickly. So just know that this is not offered to buy or sell, and we follow CFTC rule 4.41. So just keep that in mind. But we're all here to do the same thing, which is get better at making money. So we like to get started with that. So here's our information, which maybe you can get a hold of us here at BuySide Global. I take a picture of this with your phone. Or that's what the kids do nowadays. You could write it down. That's our website. There's tons of information on our website, a lot of training videos and things available for folks. And then there's our email, and there's a cell phone. You want to get a hold of us, and just respect people's business hours for those. And if you have any questions, but boy, we sure love talking. We love to visit with folks about trading in general. So if you have any questions, just even in general, get a hold of us. So, well, let's get down to what we're talking about today. So we want to talk about what is CHOP. How do you know what CHOP is, and how to calculate its range, and learn when to trade. How do you trade CHOP, and when to stay away. And sometimes the staying away is the more important part. And we want to talk about some trade entry strategies, and we want to know how to teach you how to maximize your trades. That's what where everybody walks away. We don't want to leave anything on the table. We always do, but we don't want to. And then next end, there's a special offer at the tent for the attendees here, and there's one coming up here in the middle. So let's talk about what CHOP is. I've just got to just show you what we're going to focus on today is just this CHOP right here. This is a chart. I'll explain everything here in just a minute. But this is what we're talking about, being able to take a nice $470 move from a CHOP region on a breakout. We want to teach you how to do that. So that's what we're going to talk about. You can see this CHOP. You'll see this chart again in a minute. We can answer questions about that. But it'd be nice to know, before the market's choppy. People say, oh, the market was choppy today. What that means is they got chopped. You don't really usually realize the market is being choppy until you've tried to take a couple trades and it's chopped you up. And so that's usually, it'd be nice though to be able to know the chop before, or know that it's happening right now. So again, we're also got folks here monitoring the questions here. So I'm kind of looking at them, but we also got folks to answer them as well. But it's interesting because Arthur's asking a great question. It's like, hey, who likes CHOP? And no one really likes CHOP. It's usually what he's trying to avoid. But we're going to show you how to make money during CHOP, and how to recognize when the CHOP is over. So let's get to that. And I just want to again really quickly offer you something free. I want you to be able to, everyone that leaves today, whether you purchase our products or not, I want you to have the best tools to be a better trader. And so you can take a photo with this again with your phone, or write this down, take a note. It's a free ebook on how to find out patterns and how to trade them. Now, you know as well as I do, if you've been around the trading world at all for more than 5 minutes, there are people that make really good money off of trading price action and chart patterns. So you can find the complete trading strategy on this ebook. Just get on there, download it, and we want to give that to you. No charge on there, but just it's from us to you guys. So what we're going to need to talk about, let's get into it a little bit here. The big picture, how the market moves. And the market moves is because of institutional traders. You and I and the thousands and thousands of other traders like us with our 1 or 2 or 10 contracts don't move the market. We react to the moves of the market, but it's important to understand what's going on here. What you'll see is that this is what runs the market, is the big boys, institutional traders. And big boys means boys and girls, but so basically there's 4 phases, okay? And it's not necessarily in this order, but you get it's either trending up, trending down, okay, or you get choppy in the form of accumulation. We call this demand zone, or in the terms of distribution, we call that supply zone. It's the same stuff, but it just keeps switching through these different phases. And this is run by huge institutional traders. Okay, they trade with thousands, tens of thousands of contracts, and so they get to work in the mornings, and their boss tells them she wants them to buy, X number of contracts at a certain price. And you got to realize, if she pulls the buy trigger for 100,000 contracts on gold, what's going to do to the price? That's going to knock the price completely up really fast. So she only puts in a few orders, a few 100,000 orders at a time, lets the market reverse, come back down, that hits her number again. She has a number she's got to fill, and that happens during this period of time right here. The same thing happens up here. They've got a certain number of orders that they've had for months. There's a time that they're been told to dump those out. They can't dump them all at once, so they dump them a few, pushes them the market down. They wait till it comes back up, dumps a few thousand, pushes back up. and then the market will transition back and forth between that. But that's what's happening, and this is, you can consider this, these areas are chop, okay? So does it help you with the intimate details of when you take a trade? Maybe not that, but we want you to have the big picture of what runs the market. Us retail traders don't do a thing. If we were all on the same phone call, on the same Zoom meeting, we all just said pull the trigger at the same time, we might have a little bit of chance of triggering a little bit of movement. But these institutional traders are what run the market, and they have their orders, and they have their tens of thousands, hundreds of thousands of contracts, and they can't all dump them at the same time. The other thing that happens is these folks that were in this buying at this and let the market move up have to take a profit. You have to push the sell button to get out of these trades. And so there's the institutional traders selling that are pushing the sell button. There's these guys that had this market that made a profit need to get out as well. So it's double everything that you think is happening right there. So that's just a big picture of how the market moves. So again, this is what it looks like on a chart. This is the ES 30-minute chart down here. This is what's happening. Again, these guys are loading up on the orders right here, or they're buying at here, or they are buying to get out of sell. They were short here. Then the market moves up and reacts, comes back down. They see that it's in their zone range. They get that. They pull the trigger again, either to get out of these trades or to buy more contracts. They're going to buy to get out of these shorts, or they're going to buy to get in. This is what happens all day long. Okay, that's demand zone, right? So the same thing happens on the supply. Why do you think it pushes down? Well, it's because people are pulling the trigger on sell. So again, either the guys who are taking profits because they went long, you have to push the sell button to get out and take your profit, or you think the market's going to go short and you got to sell right there. So these are areas with large number of traders, like it says, willing to enter short or trying to exit their long positions, and this causes a load up on those. That causes what we call chop. This is a trending area. This is a trend. This is nice trending up, trending down, but this is the area we typically see as chop. So, and it can swap out really quick. And let me just go through this really fast. So this is support. Support can, and then you got resistance up here. Resistance can turn into support. All right, they can be swapped out. So you realize that once the price action breaks through, for these, for example, the zones, the demand zone can become the supply zone. So just want to give a big picture of that. And traders start the day. You can draw these levels. Oh, this is where people got in, and this is where they were getting out. This is where a big sell was happening and pushed the market down. Looks like the big institutional guys came in and picked up price at this point and came back down, picked up some more contracts. That you can draw that all day long. But I want to introduce you to one of the best indicators that are out there. This is our BuySide Global Supply and Demand Indicator. You saw it before just a little bit, but this is what it looks like, okay? So this is what you have here is you've got these green areas are where the buyers are at. Buyers are sitting here at these green areas. There's orders are sitting here at these areas of buying. And of course, the sellers are sitting in these maroon, I guess that's the best way to call that, red. So this is where these guys are sitting at up here. The price moves up between these guys. Institutional guys will come in and pick up all these orders, push the price up, and then it gets these sellers come in here. Now, do you think if just glancing at this, could you make money if you knew there was where the sellers were and where the buyers were? And hopefully the answer is yes. You can see some advantage of that. But even more than that, I'm going to show you how to use this to make decisions. Notice that, so you obviously we're trading on the right side of this the chart, and notice right here the buyers have come in, pushed the price up. The sellers got defeated, couldn't push it back down like they had here and here and here and here and here. And there's a little bit of a breakout. Even these next group of sellers couldn't push the price down. So guess what? This is time to go long right here. Just kind of a quick little hint how to do that. Okay, so when there's a trend, even a blind squirrel can find a nut now and then. So it's not hard to find trends and jump in those. Those are easy to get in. But what hard is choppy. When it turns choppy, that's the nightmare. And you don't obviously know it's a trend until you're, for sure. It's hard to see those as well. So that's where the nightmare happens. And even the point I want you to understand is even your trending days have choppy sessions. So if you could recognize the chop, know how to make money off chop, that you'd be that much farther ahead, because there's a certain percentage of time of every day that's just going to be choppy. And so if you learn to master the choppy session internal details, that'll help you out. So, all right, so let's talk about what is chop. Chop market just refers to market condition where prices stay within a small range. Now, it can be short term, longer term, and it is different for every trader. From you saw Leigh do what was that, a 2-second $450 trade, $470 trade. That's a great trade. That but to maybe Warren Buffett, that's a chop. Maybe that's just a choppy day, so it just depends on your period of time. So it's a little bit different for everybody, but the best way to say it is chop, you know when you see it. So that's the way to look at that. So again, you got these accumulations. These are, and I pointed this out before, these are the choppy areas. This is where you typically call this chop. So let's get to it. So what you gotta do is you gotta know when it starts. Obviously, if you know when it's starting, you know when the price range boundaries are, and you know where the key levels are at. And then when you know a breakout, you could master on a choppy day and learn how to do that. So I want to be able to identify that, and the way you can do that is with our BuySide global supply and demand indicator. Okay, you look for extended supplies on top and extended demands on the bottom. Those boundaries will tell you where the chop is, and then you wait for confirmation to watch the bounce. Let me just show you what we're talking about. So you're trading over here, it pushes up and then pushes through these guys. When it's going through these guys, you definitely know it's not choppy there. Again, we talked about these as a little breakout area, hits up here, comes back down, pushes up even higher. You got higher highs and higher lows. So this is then generally trending. Now it does pull back a little bit, but that's just the way the market goes. But then, and these keep retreating. These sellers keep retreating, and the buyers keep advancing. So that's a trend. So you can just stair step your way up there. But then notice what happens right here. This solid wall appears up here, and it goes down even lower, and the price starts getting contained. It goes down here, bounces off, bounces up here. So you start seeing this, and you realize, oh, this is what they're talking about. This is choppy. Now, could somebody make money off this? Sure. Really quickly, let me show you. You could pull the trigger on after it bounces off here a couple times. You say, well, I'm gonna pull the trigger and make a little bit while it goes up here, but you got to realize it's not going to go forever. You're gonna have to be peculiar about your profits. Take your 1 or 2 points, bounces off it again, go on along again, but you just realize it's going to only give you a couple points out there, but it's going to check for the chop. And these rectangles boxes, these yellow boxes, and these pink arrows don't show up in these. We've drawn these in here, but you just see that both supply and demand zones just continue. They just, as long as they start continue printing, you realize I am in the chop. Okay. And great question. I've got to ask a question about these arrows. We'll talk about these in a minute. These little triangles. Those are breakout signals. We'll talk about that in a second. But so every market has its chop. All right. So let's look at some examples. Okay. This is I give you the data up here, the market up here. You can see the time frame, 1 minute. We typically trade 1, 2, 3 minute time frames. I have highlighted this. Please understand that this doesn't highlight during the session, but you see these stair steps and they keep moving back. This is a good sign, and that's the market's moving just right. But when you see these starting to be on top of each other, and these don't move and don't retreat and don't step, this is step up a little bit, but you get this congestion. This is what I would consider a choppy area. Okay, so that's an example. I'm just going to show you a few, and you can kind of just start to get an eye for that. And then you've got, again, this is another different day, different market. I guess it's ES, but again, you can consider this choppy. It just goes up into these where these sellers are. The sellers are defeated. Well, the sellers are not defeated. The sellers pick back up and push the price down again. That was some chop in this area. And then there's a little trend, and then there's a little counter trend. And then we start getting these chop areas. Well, let me show you a few more. There's a couple, some areas down here. When you see these, so we see the horizontal bars on top of the sellers, and you got the buyers down here, you realize, gosh, we're in a little chop. And then when it breaks out, you start realizing we're looking for some breakout, okay? So large institutional traders, again, are getting in and out of contracts. That's gonna be some chop, all right? Now, all this happens in markets all over, just different instruments. I've got a bunch of shows. I'll go through these, but in interest of time, I'll keep clipping along here. We want to have plenty of time to answer questions. But again, you should start seeing this when you have these, when they're close together and they're not reached. You have these are retreating, stair stepping. When they don't stair step, you recognize that you're in chop. Okay. Now, can you find the chop? So hopefully you on your own screen, you can look on there and say, oh, that's what he's talking about. There's an area here where it stays above, and this area down below, this would be a little bit of chop. Okay. And then obviously this is trend. And yes, exactly what somebody mentioned is these triangles indicate a great breakout session. And I'll talk about that really quickly. So you see this arrow pop up, and you look up and see there are no sellers up here waiting to crush your dreams. Okay, great time to go up. Now this happens right here. Let's pull some of these pink ones. This pink one pulls up. You think, well, maybe I'm going to go short, but then you look down here. This is still extended. This buyers are still here, and so they are going to push down a little bit, but it's not going to go very far because you're going to be in what you want to call chop. Okay, that's obviously chop. So let me draw those triangles in, or the arrows in. You can see. So here's the arrows. So, but could you take a trade inside the choppy area and learn to make money? Absolutely. You just have to lower your expectations. You're not going to get a 41. 47 right here. I get in 41. Let's say 41.50, and it goes up all the way up here to 65. Okay, there's 15 points. That's a pretty good trade right there. You're not going to get a 15-point move while you're in this chop, but you could take a couple points right here. You can watch it bounce off these buyers and then go back up and come down and bounce off the buyers again, pick up a couple points in there. So that's a way to handle the chop and make money while you're in the chop, as long as you know that you're in chop. Okay, so again, this is highlighted for you so you can see that the constrained areas. Okay, so you want to take the trades inside the chop, but then you look for these big breakout sessions. Okay, and that those triangles do perform that. They let you know. Now you still have the triangles. Triangles let you know, hey, it's moving up, but you've got to be the decision. You've got to be the final decision to say, hey, well, I see these guys. The sellers are right here. I'm not going to take this trade. I got sellers right here. I've got buyers down here. I'm not going to take this short. I've got buyers down here. I don't want to take this short. You have to decide and just recognize what's happening. But we're giving you the tool to recognize, to be able to recognize what is happening. Okay, so for very effective trades, here's what you want to enter the trade with a breakout with a supply and demand confirmation. Okay, and then you want to put your stop down below the recent demand zone. Okay, I mean, and the best, I like telling people, but I like showing even better, because I think showing is even better. Let me just show you an example. We'll go back to that chart right there. So let's say I was taking this breakout chart right here, this signal here. I would get in this trade as quick as I could with the triangle shows up, and you get in this trade, like I said, well, you maybe get 41.50. Where to put your stop? Well, I'd put my stop below where these buyers are at, because in order for me to be wrong, sellers would have to come in here, and then they have to push the price back down, not just to these buyers, but they'd have to sink all the way through all these buyers, and that's probably not going to happen. It's probably going to push it back up. So I would put my stop a tick, or maybe 2 ticks. We don't want to use a huge stop, but a tick or 2 below where these buyers are at, because these guys are going to save me. If it comes down here and wipes me out, if it does get them out, then that means there's a lot of motion, there's a lot of movement in the market to push down. There's way more sellers are overcoming the buyers. The bears are in control, and I would like to get out as soon as possible with minimal damage, and that would be right here below that. Okay, and again with these, if you're gonna take these longs, you put the triangle here. You don't have big expectations, but a couple points out there, and you put your stop down below here, because notice how it can't quite sink. It never does sink through these sellers, these buyers right here. You almost get to a tick right here, but if you were 1 tick below this area right there, you would not get stopped out. Okay, and same thing with this short. If you want to take this short, like, yeah, it's probably gonna go down here. Notice it doesn't. This isn't 100% foolproof, folks, but you put your stop right up here. Okay, just above this market right here. And if it chops around, you're like, well, there's a point, there's a 2 points. You could take the profit. It doesn't ever come back up here. But just want to hope you see with these bars in here, these buyers and sellers, it lets you know where the big institutional guys are at. Okay, and we'd love you to take advantage of this. But what if it doesn't? What if it's not a trending day? What if your day looks just like this all day long? We want to give you example, and I mean, the tools you need to make money on those. Okay, so again, these breakout signals are nice. These pink and blue triangles tell you there's a possible breakout. You confirm it by making sure there's no roof right over your head. There's not anybody going to bounce it off that. Okay, same thing with the shorts. You know, you take let's look at a couple more examples. Just want you to see that you can start getting a look for these choppy areas. So yeah, there it is, chop. I've got guys above me. I got sellers, buyers below, sellers above. But then as they retreat, notice that they keep rebuilding, but they're farther up. They're retreating back. That's a great breakout right there. And it keeps pushing back. You just follow that triangle, pushes up here. Here's your pink triangle, fires up. There's nobody down here, okay? And that's a great little short right there. Bounces off these guys. You didn't get a signal for whatever reason. I don't know why we didn't get a signal, but then you can see that there's no one to impede that movement up until they come step in right here. All right, so it just shows you where the buyers and sellers are at. A couple more examples. You can see this different market here. Again, we were just in this, what you can call this chop area, and then it breaks out. These start retreating. The sellers keep pushing, get farther back, and keep pushing up. And so that's a great trend today. So I hope you can start to see how you can make a great move using the BuySide global supply demand indicator. But wouldn't it be nice if you had a second or third confirmation? What if you had another indicator? Let me introduce you to a couple more tools, help you fight the chop, okay? So here's the rules. In addition to clear breakouts from rectangles, supply and demand confirmation, we want to talk about, you want to be supported by the BuySide global order flow zones. What's that? I'll show you in a second. You want to be able to do, short trades. Again, BuySide global order flow zones, a different indicator, okay? And then we would never want you to trade against the BG levels, and I'll show you those all in just a second. Really, I'm going to quickly go through in respect of your time. So, so you've got these. This is the order flow zones indicator. Notice that this little area right here, I've got yellow, I've got blue, and I've got red. That's as complicated as the order flow zones indicators gets. What it is, it's keeping track of who's winning, the buyers or sellers, okay? So blue obviously means the bulls are winning. There are more buyers during this candle formation than there were sellers. Red obviously means that's just the opposite. There were more shorts than there were longs over the lifetime of this candle. This is a 1 minute chart right here. All right. Yellow means statistically insignificant. Even though there's movement, even though there is a movement up in this one or down, it just means it's statistically insignificant. And what that means is it lets you know, hey, there may be a sea change happening on. So what you could do is you could take these trades. And I don't have the supply and demand. I want to clutter this up. But let's say that you were in a short position off here. You had there's a little breakout happening here with the supply and demand area, and you're in this red area. You're going short. What you would do is you'd use these red candles to say, hey, I'm continue moving down. I'm safe. The sellers are in demand. This is a bear market. And then you get a yellow candle like, oh, maybe a little time to get out, but because it's only yellow, it's not turning blue, you stay in the trade. Okay, and then look again, it recovers, another yellow. It's not too confirming, but then you get some more red. And look, if you'd have stayed in there, I would have pushed it down. Now, if anybody else would have been trading this without this order flow zones, you probably would have been tempted to get out here. Like, the trade moves over. But you get these lines, these horizontal lines that tell you where to put your stops. And look, you don't leave as much money on the table using the order flow zones. Okay, so this could you think this would help you make trading decisions? Okay. Guess what this is based on? It's based on order flow. It's on big institutional trading. It's on keeping track of all those, those asks and those bids, all those numbers that you see quickly change. But it's perfect for an indicator to keep track of all that stuff, and just puts it out presentation wise, just a color, which is really great for humans to just pick that up. So just let you know what the institutional traders are doing. All right. Break down a little bit more. Again, you got these triangles will pop up. Okay, you can change these. You can modify these to whatever you need them to do, so you don't get confused with the other triangles. All right, but get this long signal up. You've got a yellow candle. You got a few dojis right here, and then you get this yellow candle. boom, you jump in and you stay in this trade until it either turns red, or if you back out if you want to, because it's yellow, that's great. But knowing that it's yellow but not turned red yet, you stay in the trade much, much longer. Okay. In fact, this trade, you don't even get out until you get a short signal over here, and then you get a few red of these over here. Okay. And again, you get the short on the triangle. You put your stop where these horizontal lines are, and you just ride this trend down until it turns blue. And this one doesn't turn blue in this whole screenshot right here. Okay. So blue means bullish, red means bearish, yellow means choppy. If you had that information, do you think you could make better trade decisions? Just something to think about. Okay. Now, the last indicator I'm going to show you today is called the BuySide Global Levels Indicator. Okay. And it's one of the most successful target estimate indicators for just everyday use. Okay. You can use it as a price management indicator. And I'll show you it. Just kind of pay attention for just a second, and I'll show you what it is. As long as a little bit of momentum, it's almost certain the price is going to reach the BuySide Global level targets. Okay. You can place your trade at the targets, and most of the days, the level target's reached and the price bounces off of it. Okay. And it's a hard target. Supply demand level is a hard target. Okay. And let me just show you. Okay. I would never try. I keep an eye on these things. It's just like watching your gas gauge. It's not something that you have to look at. Let's look at it. But these are the levels. Okay, so this is your daily level down. So the market opened up here. The daily level was already waiting for you here, and then probably daily target 3 was down here as well. And so many times I get in a trade and I'm looking. I'm like, there's no way that the market's gonna get down to 40.79 today. And sure enough, it gets down. It gets tracted back up to it, extends back up through it, bounces off of it. This is like a magnet, and then it comes back down. There's another one down here. Now this doesn't get hit yet, but this zone gets hit, and then it pushes back up. And so the rest of the day it spends bouncing around between these two guys, okay? Between these two, and it extended back up through it. This gray area is also a level as well, and then bounces back down. So I would never trade off against it, but you can. And if the market were to continue to push down here, guess what's probably going to happen is it's going to bounce off this daily target 3. Okay, so I use this like a gas gauge. You don't have to watch it like you do the road, but you like to check on it and see where we at with respect to how much fuel I've got with how much far I got to go. Same thing with the market. You like, where am I at with those big levels? And these levels are very impactful. You got to see what happens when that happens. All right, let me show you a couple examples of those, and then we'll get to some questions. This is a different example. Again, you get your daily target 4, and it'll keep, as long as the momentum keeps pushing, they'll keep putting new targets on. But you notice again, the market opens up, hits this daily level up, target exceeds it, hits this to a tick, pulls back down, bounces back off this again. So I wouldn't trade against this. In other words, I wouldn't, if it starts pushing down there, I wouldn't like, oh, it's going to go long any second. Nope, more likely it's going to bounce off this, and sure enough, bounce off that, and then comes back up again, exceeds it, goes to the second one, bounces around through there. It's just a great idea to see what is happening here with the market. Okay. And again, another example here of this happening in all kinds of situations. If there's more momentum, is more herky-jerky, you're going to see more lines drawn on here. But there you go, it bounces off that. Notice how many times it hits that. 1, 2, almost 3, almost 4, 5, pushes at 6, 7. So again, if you're a careful trader, do you think you could start looking at these and realizing, man, this is going to be impactful? It's going to bounce off this and pull back down, probably to here. Nope, continues moving down. So if you had those 3 indicators, can you see what a powerful tool you'd have? You have the big picture, but where we're probably headed for that day. You'd have instant picture as far as where's the buyers and sellers, and then you've got who's winning this particular fight, the bears and bulls. So pretty powerful. Again, I'm just going to show you a few of these. I'm going to go through these rather quick, but again, you kind of get started. An eye for these. It pushes up through here, comes back, almost comes back down. Again, this is not 100%. It's not no trading system is 100%, but you can just see how the market is working. Just keep this in mind. You've got these in here. This is a thought I would never did up here. So it's coming clear down here at 10 o'clock, and sure enough, before the market closes, it goes up and just hits that to a tick past that. And I would have the whole day. I'm like, nah, that's useless. Okay, I don't want to go over these too fast, but we've got a few minutes left here to go through a couple of these. You can just see how this works right here. Bounces off, comes back, pushes through it, would come back to it. I would have missed this trade. I would have thought, well, it's gonna come back here and I'll take a long off this. I missed it. Didn't happen. But that's trading. You have to realize that. So, but it works in all kinds of different markets. Okay, there's another one right here to show you that one. And let me, I've got a couple more here to show you. Again, you're over here early in the morning, market opens up, comes back down, hits that level, bounces right off of it, extracted the first one, the second one to a tick, and then pushes back down. Again, these are very powerful tools, and you can use these for your trading and helping you making trade decisions. There's another one there, and let's keep moving. Another nice one right there. Just almost hit that to a tick. And these gray shaded areas are areas of impactfulness as well. You're heading into that level here. So I keep these up on my screens, always have them up there. And there's a lot of times I'll not take a trade because the supply demand order flow zones is saying, hey, go ahead and get short. Well, I know that the daily level down target is here, so I have confidence to get in a short in this area, but I would never take a short going past that because oftentimes it bounces off these. I would want to get my profit and get out of that trade. All right, let me show you a couple more of these. These are nice. Now, let's get to the offer. Okay, I want to show you what the heck's going on here with BuySide Global for right now. Now, normally, if you were to purchase this yesterday, a week ago, the BuySide Global Supply Demand Indicator, it's $495 per year. So I call that $500. That's 10 points in the ES. I think of everything, including the price of milk, gas, and a vehicle, and how many ticks or how many points it is in the ES. So there's 10 points. So for 2 points a month for 5 months, you'd pay for yourself right here. BuySide Global Supply Demand Indicator. Same thing with Order Flow Zones Indicator for $500 and Levels Indicator. So it's over $1,400 per year. Not a bad investment. These are tools. Anytime you start a business, you can try and supplement your income. You can try and have any kind of business where you are going to make the money. You're going to have to put money into it. Okay, you just know that. Whether it's you want to open a barber shop, you want to become a lawyer, a doctor, you want to sell a lot lemonade on the side of the road, you want to cut people's lawns, you're going to have to invest some money in this. So this is what you're looking at. These are tools that you're going to need. Carpenters need good saws and hammers, nail guns. This is but obviously you're not going to pay that much. Okay, so we're going to make sure that because you've been here, we did throw in a free ebook, but I want to make sure we're going to take care of you. We have a great memorial sale right now. Okay, this is the best I've seen so far ever. This is the BuySide Global. We're going to call it the Trend Chop Bundle. Okay, take a picture of this screen because that's where you have to go to do. Our regular site isn't going to get it done for you. Okay, just the BuySideGlobal.com. You got to get that / on there. Sorry, / trend on there. And this is a limited time offer. It's going to be offered from today. I think it's set up for right now, and then till tomorrow. So I don't know how long tomorrow. When tomorrow ends for you, this still will be done. Okay. So instead of putting 200, we did this before. We did pay $285 and then pay per month. Now you don't have to put $285. It's $185 down. So your first month, instead of come up with $1,400 or even $495 to get one of the indicators, you put $185 down today. Okay, you spend some of that money that you're going to have to put into this business, whether it's a new screen or a computer. You can put $185 down, and then each month it's going to renew at $59 a month. Well, by then it's going to pay for itself, obviously, and you can use the market to pay for these indicators. Okay, $59 a month, $60 a month. You know, that 50 bucks a month. Again, that's 1 point on the ES. And if this could help you make 2 points on the ES per month, that's obviously going to pay for itself. Okay, 30% discount. You got to type in the word memorial. Okay, again, you're getting $1,400 of value today for putting $185 down. I hope I'm making sure I'm making sense, that you, instead of coming up with $1,400 on a card or writing us a check or however you want to do it, PayPal, Venmo us. Okay, instead of coming up $1,400 and walking away with 3 great, powerful indicators for $185 down today and $59 per month, we're stretching that out so it's a little bit easier to work for. Okay, a couple questions I'm getting here. Let me make sure I can answer those. For example, one person, and this is a great question, is what platforms does it work on? We have partnered exclusively with NinjaTrader. They're our folks. We value them, and they seem to treat us pretty well as well. So it's just on NinjaTrader. Here's what you could do if you're working. I've worked with people before. They're using TradeStation, Thinkorswim, or they're in any of the other platforms. NinjaTrader is free. So you could purchase this, put it on your free NinjaTrader, and use that information to take trades on whatever market you're trading on, whether it's stocks, crypto, or FX, or futures. You can use the free version of NinjaTrader to take trades like that. Okay, so that's what we want to be able to do, is we get this discount. All right. And let me go over one other thing if you're asking about satisfaction. Okay, so 30-day exchange, no questions asked. You can swap it out for 30 days. In other words, you're like, you know what, that Dave liked that levels, but I just don't use it. My trades are too quick. I don't really care about that. What else have you got? We will show you our cornucopia of indicators that are working great, and you can try one and you can exchange that one. We just want to make sure you're happy. Okay, and your auto renew is cancelable. You can cancel it. You're just like, you know what, I don't like it. We want you to be satisfied. These are great tools. There are a lot of satisfied customers out there that are making great money on our tools, and we want you to be able to join those guys. Okay, no questions asked. We want you to have a phenomenal trading tools. And let me add something else here. If you're struggling, if you get these and 3-4 days go by and you've just, as they call it, screw the pooch, it's not working, you've lost money, we want you to stop trading, call us, get one of us on the phone. I'd be more than happy to talk with you. I mean, let's figure out what it is that's going on. Maybe you're pulling the trigger a little too soon. It takes a while, and we can help you with your trading journey. If it takes a couple of phone calls, that's great. We're here for you. It's not a big deal. I'm talking trading all day long, whether it's clients on the phone, my buddies on the phone, over at my friends' houses, or my poor family has to listen to it. More than happy to get you on the phone. So let me. This is our last screen. Again, this discounted pricing, good till tomorrow, whatever tomorrow means to you. I wouldn't mess around and want to wait and see right before the last second here. But again, take a picture of this screen, buysideglobal.com/trend, 35% discount code memorial. And you're getting 3 premium indicators for 59 cents a month, renewable. Okay. Now let me look over and look some questions. Ready for questions. What's your name? Oh, my name's Dave. Sorry. Questions about somebody asked me the questions about the yellow section. Let me, as I'm going through, I don't want to take up anybody else's time, their next guy's time. I'm not seeing good, just statistically insignificant. Oh, yeah. So they're asking about the BuySide Global order flow zones, yellow candles, and I don't want to say it's equal, but I don't know what statistically insignificant is. It just means that the buyers didn't win, the seller, it was just basically a tie, maybe within 100 contracts, 5 contracts, 10 contracts. It depends on your time frame. So that's all I have. So I'm just looking at the last of these questions. Not seeing anything else that hasn't been answered. So I am going to, I think we're pretty much wrapped up here. Rob, can you hear me okay? We don't want to run.
I can hear you just fine.
Yep. I don't
If you'd like to invite anybody to email you with any further questions, I did put your email, phone number, and the link to the website in the chat box for everybody. And I'll say thank you to you, Dave, for providing our audience with incredibly valuable information and a generous offer, and your associate, Rob, for answering questions in the background while you were presenting.
Absolutely. All right. Thank you.
No
Thanks,
problem.
Nice to be here.
Thank you for coming. Ladies and gentlemen, if you'd like to learn more about BuySide Global's trend-based supply and demand trading strategy and how to effectively trade during choppy sessions, I've done, the promotional link, the information, the contact info, whatnot in the chat box. I'm sure they would be happy to hear from you. We love having them here on Traders Corner. Dave, Rob, great holiday weekend. Please come back and see us again. All right, that will bring us to our next presenter, and I just saw the name on the list. He is one of my personal favorites. He is a decorated former Navy fighter pilot and graduate of the Navy Fighter Weapons School, Top Gun. He was also selected by one of the largest options trading firms in the world to be their managing director of strategies. He's the founder and CEO of Options News Network, and in 2010, he founded Top Gun Options to train retail investors of all skill levels how to trade options. He's done over 10,000 people to date. Here to present how to target profits in a hostile environment is Mr. Matthew Whiz Buckley. Welcome back to Traders Corner, Whiz. Happy Memorial Day to you, brother, and some of the brothers that you did not have come home with you. Thank you for your service always, and I'm looking forward to seeing what you have to say again, sir.
Awesome, man. Thanks, my brother. I appreciate it, folks. Yeah, it is. It's Memorial Day weekend, and that to be honest with you, especially with what's coming up in June, some folks in this country get an entire month, don't they? Veterans get a day, and those who didn't make it back get a day, when other folks get a month. So let that sink in. Not, maybe someday we can kind of change some of that. But yes, Memorial Day weekend. Thanks for having me. I appreciate it. We're actually changed my presentation because of the target we're going to talk about today, and it's called Trading the Death Star. And if you're a parent, or even if you're just like me and a Star Wars nerd, you know what the Death Star is, right? So we're going to dig into the only stock that you need to own, period. And if that doesn't resonate with you, I'm gonna fix it. Trust me. Okay. So silence that electronic nicotine, no distractions, because you've never heard that before, have you? You've actually heard the exact opposite. I can't just trade one stock. Well, you've been lied to. What's the Death Star? That space station that took over the universe, right? Got blown up by a bunch of teenagers in like a broken down Winnebago spaceship, but they rebuilt it, and it came back even bigger and stronger. That's the stock that we're going to talk about today. But as you just heard, former Navy fighter pilot, so a little bit of an aviation theme to this. So I'm going to ask you a question. Which fighter aircraft would you rather fly? And I'll give you two choices. Here's your first choice. Take a look at that cockpit. This is the cockpit of the F-4 Phantom. Big labor-intensive aircraft. Look at that. Look at all the steam gauges, all those switches and dials. Over 300 switches and dials in that cockpit. This pilot would spend a lot of what we call heads down time looking at all that stuff instead of eyeballs out of the cockpit looking for enemy MiGs, surface air missiles, or AAA anti-aircraft artillery. Matter of fact, this was so labor intensive, they threw another dude in that airplane in the back seat just to work the radar. So very labor intensive aircraft. So would you rather fly that or this? That is the cockpit of the F-35 Lightning, the Joint Strike Fighter. Ladies and gentlemen, look at this cockpit. It has two flat panel displays. That's it. This jet, we call this jet the Wonder Woman jet, folks, because it is obviously it's invisible to radar, but the pilot, the helmet that they wear projects everything they need to see right up there. When they look down, they don't see this aircraft cockpit, they see the ground. When they look up, All the threats are displayed right in front of their eyes. And this jet is smart enough that it actually limits the amount of information it shows the pilot. At certain points of the flight, they're like, doesn't need to know the status of the hydraulics or the fuel or any of this stuff. I'm going to hide all of that and only give mission critical information, folks. This, and to be honest with you, this jet's a little creepy because it learns. All the Joint Strike Fighters around the world, they're learning, all right, at this point, this pilot looked at this during the flight, boom, boom, boom. It's getting creepily smarter. Take a look at that helmet. Speaking of Star Wars and Darth Vader, look at that thing. So the answer is clear, right? What's this have to do with trading? Everything, folks, because a lot of you are flying around in an F4 Phantom, and that's why you're not doing so well. My promise, by the end of this brief, I'm going to give you an up-to-date intelligence brief, because before we talk about any targeting of any stocks or anything, you got to know what's going on. I'm going to show you the only stock you need to own, and like I said, potentially a good substitute to trade. If this message doesn't resonate with you, I got a backup plan. As you heard, my name's Matthew Buckley. My call sign's Whiz, former Navy Hornet pilot, graduated from Top Gun, the adversary course. So I was actually a bad guy. You had to be a really good guy to be selected to be an instructor as an adversary, as a bad guy. Deployed to the Persian Gulf a couple times on board Abraham Lincoln and Kitty Hawk in support of Operation Southern Watch. What's this have to do with trading? Everything. As a young aviator, I started trading. You don't join the Navy to get rich, folks. Clearly, you don't join the military to get rich. Join the Navy to serve my country and see the world, and I did. But during the downtime, instead of drinking coffee in the ready room and just, talking sports, I learned how to trade. I taught myself how to trade. And well, now I'm going to date myself. 1991, when I reported to Naval Air Station Key West, I sent a $25 check, which was a lot of money to me, to the USAA Aggressive Growth Mutual Fund. And then it just kept getting better. I'm like, wait a minute, why am I paying somebody to pick stocks when my girlfriend right now keeps Ann Taylor in business and I pay the American Express bill? First two stocks I bought. Short story long, I've been doing this for over 3 decades. Went from being an amateur, so to speak, to the corner office of a multi-billion-dollar volatility arbitrage firm. So from the cockpit, essentially, to the trading pit. But I applied everything I was learning flying a fighter aircraft to my trading. Having a strategy, implementing tactics that support the strategy, contingency planning, talking about when to get out of something, either before it gets really bad or when it's good. Managing risk. Okay, this guy's a fighter pilot. He's talking to me about managing risk. Yeah, flying off the pointy end of an aircraft carrier is dangerous enough without being just stupid. So we want to minimize, as a fighter pilot, as a trader, all known risks, right? So I applied that to my trading with incredible results. As a little old lowly retail trader, I popped up on the radar of this firm right here. Everybody should know that building, especially if you watch Batman. Right, that's Gotham. Nope, that's Chicago. That's the Chicago Board of Trade, and that was my firm right there. Absolute blast when I was in Chicago. There's our trading floor. I helped build a hedge fund when we were there. I helped build the retail brokerage known as Options House, which I think got swallowed up into like Trade Monster, E-Trade, whatever, and just had a blast. I also started the Options News Network, ONN TV, the CNBC for options, right? They even booted John and Pete Najarian recently, so they don't even talk options at all. We were options 24/7. We shot on the floor of the CBOE and the CBOT, and I gave you all a behind-the-scenes look at what was going on in the options market. And I jokingly tell people, yeah, I'm the real-life Eddie Murphy. I'm Valentine in trading places. I went from the streets to the corner office of a trading firm, and I got a little secret to tell you. There ain't no such thing as the smart money. We are the smart money. I've been there, folks, and these people ain't rocket surgeons. Matter of fact, some of them make some pretty damn stupid decisions. I mean, last week it was reported that Carl Icahn took a $15 billion hit because of some 38-year-old kid down in Miami. We are the smart money, folks. Don't let them tell you otherwise. Wrote a couple books, From Sea Level to Sea Level, me leaving the military, going to Wall Street, and then COVID crash. I was the only, to the day, financial professional to predict the COVID market crash to the day, and we made millionaires here at Top Gun Options. Little old ladies in tennis shoes literally became millionaires Do you remember what the smart money was telling you during the COVID crash? Oh, this is the bottom. I'd be buying here. The president of the United States, in a now deleted tweet, Donald Trump, which I have a screenshot of, stocks look good here. I'd be a buyer of stocks. Next day, they went down 3,000 points. I pounded the market into the dirt, and we nailed the turn. The turn was really easy. It was a Thursday morning, 10 million weekly jobless claims. As I was getting ready to hit enter on the biggest bearish trade of my life, what happened? Jerome Powell came into this market and dropped the biggest financial nuke known to man. And the market has never looked back. Well, except for recently when he's raising interest rates. So wrote a book about that. If you don't believe me, got all my trades in there and everything like that. We made millionaires. I also have a podcast, top 2.5% of podcasts in the world, called the Max Afterburner Podcast, where I talk about my work with our foundation. I run the No Fallen Heroes Foundation, which is a 501c3 charity dedicated to saving the lives of veterans, first responders, and their families. Anywhere from 22 to 44 veterans kill themselves every day. It's a disgrace. And I'm going to blow you away with what I do, because I just got back from Costa Rica. I take veterans, first responders, and their families to Mexico, to Costa Rica, to do psychedelic or entheogenic therapy, and it saves and changes lives. Separate conversation for another day, but I am blown away by the work we're doing and the lives we are saving and changing. Also own a couple fighter jets. If you join Top Gun Options and end up being a lifetime member someday, if you make it to South Florida, I'll throw you in the back of one of our fighter jets and we'll go out and dogfight. My only recommendation is to eat a banana for breakfast, because it's going to taste the same coming up as it did going down. That's my family. Really old pic, but I love this picture because that's when we left Chicago, when I said, you know what? I'm a beach guy. I'm a Navy guy. We're moving to Florida. Chicago, you can keep it. 9 months out of the year, it's a survival situation. And I need beach, warmth, and ocean. So, but this young man is 23. He's going to the officer candidate school for the Navy. He wants to fly. Jack is going to University of Colorado Boulder in the fall. He's going NROTC, also wants to fly. Keely is 15, going on 29. She's a cheerleader and she's not allowed to leave the house. So that's a little bit about me, and that's the last you're going to hear about that. But whenever you come to these things, if the dude or the lady just starts ripping away and slides and here's my trades and all sorts of stuff like that, I don't understand how you can follow somebody you know nothing about. So that's just a quick little bio about me. So let's go ahead and get airborne. So folks, this is either going to be shocking or it's going to be a moto moment, master of the obvious, right? There's a guy in one of my squadrons, his call sign was Moto. He was the master of the obvious. But you ready for this? This is some shocking news, or it's not. You ready? Wall Street is lying to you. Now, half of you, of course, just said, duh, and the other half said, well, what about this time? Ladies and gentlemen, how many times have you heard this? You cannot put all your eggs in one basket. I mean, it's investing 101, isn't it? The first day you went to investing flight school, they said, you must diversify. Diversification is important. You must diversify. You can't, blah. It's obscene how many times you have heard about this. It's a lie. Who's been lying to me, Whiz? That guy. Ladies and gentlemen, have you not seen the movie Wolf of Wall Street, or the movie Wall Street, or Boiler Room, or do you not know anything about commissions, brokers? Whenever you use the word broker, folks, I don't care if it's a real estate, stock, or yacht, they work on commissions, folks. They want you in and out of as many names as physically possible. Look at the movie Wall Street, Bud Fox with his phone book. All right, fellas, we got the little old ladies in tennis shoes into this stock yesterday. Call them up this morning, get them out. Here's the next new hot one. It's a lie. It's called churn, ladies and gentlemen. They want you in and out of many names as possible. Diversify. It's a lie. Now, if you're sitting there before you even type, I trade commission-free Whiz at Robinhood. Let me let you in on a little bit of a secret. You ain't the customer. If you're not paying anything, you ain't the customer. You're the product. Ladies and gentlemen, the customer, the two customers at Robinhood are who? Ken Griffin at Citadel and Stevie Cohen. It's called payment for order flow. So they get their money, folks, and you ain't the customer. So at the end of the day, folks, diversification is for stupid people. And if that offended you, let's get an old stodgy guy to be nicer than me. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Doesn't that make sense? Doesn't that make sense, folks? He's nicer. I'm more direct as a fighter pilot. It's for stupid people. It's like sitting down at a blackjack table and putting, bets on every spot. No, man, I'm a card counter, right? Diversification is a protection against ignorance. If you know what you're doing, don't do it. The only stock and the most diversified stock in and of itself on the face of the planet is Amazon. Period. It is literally the Death Star, ladies and gentlemen. The dude went from sitting in an apartment selling books to being physically in just about every vertical there is. Look at this. If you had told me in 1991 I could have invested in a company that would grow at a compounded annual growth rate of 30% a year, I would have been like, I would have sold my girlfriend, my car, and my house and bought this stock. It is obscene the amount of money that Amazon makes. Look at that chart. Look at the annual revenue by segment. Ladies and gentlemen, AWS is a massive, I got to update this chart. All of this stuff looks like this now. But AWS, they started, Andy Jassy, the current CEO, and Jeff Bezos started that in a condo. AWS, ladies and gentlemen, Amazon Web Services, is Microsoft. They essentially have their own Microsoft. Everything Amazon touches turns to gold, folks. Now, here's what Democrats, we're going to get political? No, but for a second we will. You ready? Democrats hate Amazon and they hate this chart. Why? Well, first of all, if you had blacked out the name here and said, Whiz, would you invest in this stock? I'd look at it and go, oh my gosh, look at the sales. That's obscene. Look at all right, sales is up, cash flow. Okay, yeah, I'm still kind of digging it. Profit, oh my God, I'm going to short this stock. And I'd be an idiot and I'd be broke. Why? And why do Democrats hate Amazon? Ladies and gentlemen, Jeff Bezos has said since he started this company, he doesn't even know what the word dividend means. He's like, what a stupid concept. If I make $1 at Amazon, I'm going to take that dollar and buy a competitor, put somebody out of business, buy a new airplane, he does something with the profits. So this is why Democrats hate Amazon. They try and come after him all the time. It's like, dude, I reinvest all the money that Amazon makes back into the Death Star and we get bigger. That chart right there should make you uber bullish on this name. Okay. So real quick, a couple case studies. JG with a small account. These are current TGO members trading Whiz Amazon trades, netted $8,900 in 1 week. Kristen, she lives out in San Diego. You guys are amazing. I trade a smaller account and have done 22 Amazon trades this year for $31,000 in profit. Christine, month-to-date profits on Amazon, 107 with more to go. Thanks, Whiz, for all your expertise and guidance doing day trades with short calls to protect my Amazon profits. Learning from the best. And blows me away. Amazon, this was back in November, in 3 days, made $90,000 on short calls against her 30 contract using Whiz's guidance. This ain't hard, folks. Amazon is diversified in and of itself. Okay, and we'll get into that in a couple more minutes here. But before I sing the praises of doing this, just investing in Amazon, I'm a fighter pilot, I'm a trader. We look at the threats first, right? What are the risks of just trading one name? Well, anybody ever hear of a small mom and pop company called Lehman Brothers? 150-year-old company gone in essentially a day or 2 days. How about Bear Stearns? Jim Cramer knows Bear Stearns pretty well, doesn't he? That famous clip, he's like Khrushchev at the UN, a bald dude frothing at the mouth, like banging his shoe on the table. These people are stupid. Your money's safe at Bear Stearns. It was $70 when he said that. It was $0 a couple days later. Nice call, Jim. How about Pets.com? How about Enron? Folks, Pets.com was a stinky sock and a URL a domain name. Enron, they didn't even own the building they were in, the middleman of electricity. Folks, what am I getting at? And we can spend the rest of our time, and I'll ripple through names of stocks that have gone to zero. So stocks can go to zero, ladies and gentlemen. But what is the common theme between the four names I just randomly picked? They didn't own a thing. Lehman Brothers, Bear Stearns, paper, contracts, counterparties. That looks like Lehman Brothers didn't even own the sign. Domain name, and I'm just a middleman of electricity. What? They didn't own a thing. Ladies and gentlemen, or, crypto. Crypto can also go to zero. Another good Jim Cramer call. But folks, Amazon owns stuff. It is physically impossible for Amazon to go to zero. I did consulting for an Amazon fulfillment center south of Miami International years ago. It was an aircraft carrier. It was huge, thousands of people, machines, and packages. It's own stuff. Now, full disclosure, when I left the Navy, I went to fly for FedEx for 10 months. Could not stand flying for FedEx. Different story, different time. But folks, it was miserable flying at night from midnight to 8 in the morning delivering packages. You can keep it. But I had buddies in corporate who became senior pilots, and about 7, 8 years ago, I forget exactly when, I had a buddy call me from FedEx corporate and go, "Hey man, Jeff Bezos, what's he doing?" I'm like, "He owns Amazon." He's like, "That's weird." I talked to a buddy of mine at GE aircraft leasing. He's leasing 5 airplanes, and I go, "He's going to do it." And my buddy goes, "Going to do what?" I'm like, "Going to put you out of business." He's going to buy his own FedEx, or he's going to build, not buy, he's going to build his own FedEx and UPS. And my buddy laughed at me, and look who's laughing now. Amazon has passed UPS and FedEx. Folks, they're actually flying UPS and FedEx packages. It's comical. Okay, now, seeing this guy on the screen, if it made you freak out, relax. Why is Donald Trump on the screen? Because this is another potential threat, right? Or is it? When Donald Trump was president, he woke up one morning, or didn't go to bed, depends on who you believe, grabbed his phone and started what? Tweeting. Jeff Bezos, Amazon monopoly. Somebody needs to look into it. Bad, very bad. What happened? Stock went down a little bit for like a day or two, and the stock looked around and said, okay, well, all right, nothing happened. Then what happened? Nothing. The last year of Donald Trump presidency, he did it again. Amazon's a monopoly, needs to be broken up, and the Washington Post, unbelievable. Somebody needs to do something. The stock actually rallied. So yes, there is political risk in just trading one name, which is Amazon, right? I get it. Oh my God, they're a monopoly and they're this and antitrust and FTC and all that stuff. Folks, guess what? I'm old enough to remember Standard Oil, IBM, Microsoft, AT&T. When Uncle Sam looks at a company and goes, "You know what? We think you might be really big." It takes anywhere from 5 to 10, in some of those cases, 15 years for the government to get around to like, "You know what? We think you should, we need to break you up." Last time I checked, Jeff Bezos is the richest man on the face of the planet. I'm fairly certain he probably has 1 or 2 attorneys on staff to fight all of that stuff. But here's what's even funnier about if they tried to break Amazon up. It's like Mercury. If they smashed Amazon, it would create like 12 individual monopoly companies. I mean, so it's funny because when I look at the verticals of Amazon, it would make more money or more sense to break up that company and monopolize 12 different. I'm going to tell you right now, folks, I've made this prediction and it's coming true. A couple of years from now, you're going to get a text that says, "Hey, go to your front door. Your prescription's here." You're going to open the door. A little drone's going to scan your face and drop your prescription in your hand. You want 2 good stocks to short? CVS and Walgreens. Amazon is taking over everything. So even if politicians jump in to try and break them up, it ain't going to work. Okay. So, it's really interesting because they're laying off employees right now. All the big tech companies are, even though Amazon's kind of not a tech company, it's just its own service company. They're actually trimming their sales right now for this economy. I know Democrats have changed the name, the definition of recession and woman, we're in a recession right now, right? I believe Elon Musk when he says we're most likely in a recession, but that's a good thing, right? I don't like seeing headlines that say Amazon laying off, 30,000 employees. That's Whiz. That's me as an American and a human. Me as Gordon Gekko, I'm going to tell you, good. That goes right to the bottom line. So I tell people at Top Gun Options, I'm a little bit bipolar. I'm going to tell you how I feel as an American. First of all, as an American, I can't stand Amazon. I can't stand Jeff Bezos. I think he pays his employees crap. He treated them horribly during COVID. They didn't even have personal protection equipment for the longest time. I can't stand Elon or Bezos. Guess what? Just like this guy on the right said in the movie, you want a friend, get a dog. I'm going to teach you how to make money. We have been printing money trading Amazon, but every once in a while, I can't tell you how I feel, but we are going to make money trading this Death Star. All right. I've briefed you on the risks. Now, what are the benefits of just trading a solo stock? Well, folks, you trade that name and you're going to potentially profit with options no matter what direction Amazon moves, up, down, or sideways. Now, if you're just trading the stock, you can make money three ways too, right? It's called the buy, hope, and pray. I bought Amazon. I hope it goes up. Oh, geez, it's not. Now I'm going to pray. I'm going to teach you how to trade options, and it ain't hard at all. So you trade the same name, and you can potentially profit no matter which direction it's moving. We had a range-bound trade, I think, this week. That's called an iron condor. We made money with it moving sideways. You stay focused on just the news and events that impact Amazon instead of a ton of different stocks and ETFs. You become an expert in Amazon, reducing all the time you would spend on other, positions, right? I'm going to give you an example. Now, take a look at that. That's the F4 Phantom. Why am I showing you the F4 again? Because a good buddy of mine, we're really good buddies now, but I'd met him years ago in Boca. He's an orthopedic surgeon. Came to Top Gun Options. Whiz, I heard about you. You're a good trader. I need to learn, and I'm just kind of lost. I work 10, 12-hour days, surgeries, office hours, and I'm like looking at my phone in between, going to the next consult and trying to trade. I'm like, oh my God, man. And I met him at Starbucks, boots up his laptop, shows me his whatever account it was. You ready for this? That dude, that doctor, had 33 positions. Hand to God, I swear, 33 positions in his account. It was insane. He tried to give me a brief. He started like this. He's like, well, I'm like, what is, I almost fell out of my chair. I'm like, what is this? He's like, well, that one's I think it's a pot stock. I'm like, did you just say, I think? Oh, this one's a surgical stock. The buddy of mine got me into it. It's down 50%, but I'm waiting for it to come back, before I get out of it. I'm like, Doc, you're a doc, right? Yeah. I'm like, you're smart. Yeah. Do the math. How much does that stock have to come back right now for you to, I'm like, stop talking. I'm like, you're done. We're going to get out of everything. And I simplified his life, literally. I'm going to tell you, folks, after doing this for 3 decades, I do this for a living. If you have more than 3 to 5 names and you're not sitting here 24/7, you're doing it wrong. How do I know that? Folks, we had a research desk at that firm in Chicago. There was like 25 analysts, and their job was to be an absolute expert on 2 or 3 names each. Do you know how many times I'd walk over to that desk and go, dude, you were supposed to know this name like better than your mom, and you blew it. So folks, how can you, if you're a retail trader with a life and a job and kids or whatever, have that many positions? Simplify your trading cockpit with one name. Now, if you're sitting here going, dude, this makes total sense to me, but Whiz, when I first started trading or investing, they dug their fangs into me. I have got to diversify. Guess what you're going to trade then? XLY. If you are just a must diversify robot, there's your diversification. In our solo Amazon service, we also trade XLY. It's an ETF. It's the consumer discretionary ETF. And what is the #1 holding? Amazon. About 25, a quarter of this ETF is Amazon. I have a good buddy who says, hey, shrimp are a vehicle for eating cocktail sauce. The XLY is a vehicle for eating some Amazon. But look at what else we got. We got some Tesla, Home Depot, McDonald's, Nike, Starbucks, Lowe's, Target, Booking, and TJX. Wow. So if you are like, hey, man, then how about you just trade XLY? You trade Amazon and XLY. That, ladies and gentlemen, is a diversified portfolio. You don't need 10, 15, 20 positions in your portfolio. I don't know how you do that, and I do it for a living. So how do we target Amazon and XLY for max profit? When you join every Monday at 10 a.m., I do a live trade brief, Eastern, for solo Amazon. I'm going to show you how we establish a beachhead. It's Memorial Day weekend. We're going to storm the beach. We're going to establish what I call a base position. With options, we can hop in a time machine and fly all the way out into the future, about 2.5 years, and we're going to get long-term bullish with a tactic that I call synthetic stock or a long call diagonal. Now look at the parentheses, protective puts. I never went flying in my Hornet without an ejection seat. I never went out to the aircraft and said, hey, Chief, I'm not going to get killed today. Pull the ejection seat out. I want extra gas. What a stupid thing to do. So I'm going to show you how at all times we are protected against potential bad with Amazon, okay? After we have our base position, we're going to trade what I call the front month. The front month is simply, you're sitting in a front month, May, June, July. So we're going to establish a bullish position a couple years out into the future, and then we're going to trade what I call the front month. Amazon's going up. It's been on a tear lately, by the way. What have we been doing? Trading bullish spreads or buying calls. Uh-oh, Amazon's going down. Who cares? Over the next 2 years, Amazon's going up, I guarantee you. But it's going down right now. Good. We will make money as it goes down with bearish spreads, or maybe we'll just buy some puts. How about it's just kind of channeling here, Whiz? It's moving sideways. I have a tactic for that. It's called an iron condor. So, folks, there's how we target Amazon, and if you want to trade XLY for max profit. Now, let me go show you one of the positions that we have in our current portfolio. So I manage 4 model portfolios here at Top Gun Options. Solo Amazon is obviously every Monday at 10 a.m. What do I have up here? This is my primary portfolio. It's every Tuesday at 10 a.m. We are up over $93,000 year to date. We have been trading the heck out of the S&P 500. There's some Amazon in here, a little Goldman Sachs, and a little volatility as well. But I have a good Amazon position in this portfolio that I want to show you, that I'm going to help you figure out. It's up 78% in about a month. It's up about $5,000. This, ladies and gentlemen, let me click Analyze. And I'm going to show you what this is. We have what is called synthetic stock at the 95 strike, all the way out to June of 2025. Okay, so this position's been on for a little bit, but I'll show you Monday morning. Let me just bring up the options chain real quick. Options on Amazon. Let's hop in our time machine, and we're going to go all the way out. Look at this. We can get bullish on Amazon now to December of 2025. So the tactic that I'm going to show you is called synthetic stock. We're going to sell an at-the-money put. We're going to buy an at-the-money call, and then we're going to buy what I call some disaster puts underneath. What would be a disaster, right? I use a rule of 20%. Most analysts or most, quote, smart money says what? If the market or a stock goes down 20%, it's in what? A bear market. So I'm going to show you how we, you can call them protective puts or disaster puts, whatever. We're going to put some disaster or protective puts 20% underneath the stock. So this is what my current position looks like right now. So let's go back to that. Amazon, analyze it. So this is what it looks like. I put this trade on when Amazon was down at $95. It's up to like 120 right now. So that's why this trade is making money. That's why it's currently up $5,000. Let's go take a look at Amazon real quick. Look at the tear we've been on. Let me do a 3-month chart. Look at that. Just rip your face off rally. This has 150 written all over it. Let me 1-year chart. Yeah, look at this. We are on a monster run right now after that earnings. And like I said, they are trimming their sails very, very appropriately. This stock is 150 on it. I'd say by the time when you join me Monday morning at 10 a.m. and we put on a new synthetic stock trade, I'd say Amazon 2 years out into the future is probably a $250 stock. And this trade, a synthetic stock trade, would be a 6-figure potential profit. We do synthetic stock names. JP Morgan, I've done a synthetic stock 2.5 year trades. It's slow and steady wins the race, right? These ain't like, hey, I'm trading this every day. No. This is nice, slow and steady wins the race. But here's how I can also make some quick money on Amazon. I can sell some front month calls against this position, right? Let me just go back here. How many? I have 3 contracts. So for next Friday, June 2nd, I could sell like 3 at the money calls against it. Sell 3, and I could potentially bring in $500. Okay. If I sold 3 of the 121 calls out the next Friday and it closes below 121, I can bring in $500. That's some drinking money, man. 500 times 52. That's 26 grand potentially just in selling short calls. That's not including the stock going up. That's not including us doing other spreads and everything like that. So that's pretty nice, isn't it? So if you understand a little bit of what I'm saying, then you can do this, right? But I'm going to train you how to do this stuff. We don't, I just don't throw you into out of the frying pan into the fire. No. I'm going to train you. Okay. That's what I do here at Top Gun Options. We train. Ain't no such thing as financial education. The world is full of educated derelicts. I'm going to give you some financial training. So Solo Amazon is the name of this service. It's one of our newest live trading services and also the most popular right now because it does help people simplify. Usually the other briefs that I manage are $167 a month. This is only $897 a year or $97 a month. Obviously, the annual is cheaper, and I'll give you both these links in a second here. But if you just want to do a gateway drug to check out what we do here at Top Gun Options, I'll give you the link for $97 a month. If you're ready to do an annual right now, which you should, I'll give you 25% discount. All right. So we'll put the links here in the chat box in a second. Whiz, Monday, 10 a.m. I work. Well, guess what? 80% of our TGO members work for a living. You don't have to be there live. I send out text alerts. There's a recent Amazon text alert, and I send out an email. They fire at the same time. Text alert to the cell phone, email to your inbox with the screenshot of the trade, the risk management parameters of the trade, everything. And then about, 20, 30 minutes after I stretch my legs and the replay renders, I will post the replay on the member page. Chris, I'm so geeked. I've been a subscriber for 3 years, and this is the first time I've been to attend live. I only know you from the replays, okay? Join today, and I'm going to give you access to our proprietary manuals, primary, intermediate, advanced. These are $197. If you wanted to buy these right now on my website, they're $197. So for all the political science majors in the audience like me, let me help you out with some math. Solo Amazon's $97 a month. Okay, got that. He's giving me 3 manuals that he charges $197. Yeah, let me save you the math. You just made $100. I put $100 back in your pocket. These manuals, you cancel after your first month, you keep these. These are $197. Folks, I reread these. I'll go to the beach and you know what? I need to knock the rust off. I'll get back into these. So this right there is worth the price of admission alone. So you're going to get access to our brief every Monday, 10 a.m., the text and email alerts, the manuals, and access to what we call our Ready Room. It's our members only forum online. In between briefs or whenever at midnight you ask a question, I get an email that says, hey, somebody's asking a question in the Ready Room. I'll get in there and answer it. Okay. Bob, closed all my Amazon positions associated with the synthetic stock for $37,000 profit. Goose, look at that. $23,800 in a month in solo Amazon. Chuck, thank you, Whiz. Closed 3 contracts at my 30% profit target. Cleared 15 grand. Also had another 6 contracts that hit another 50. Okay. If you want to test fly, like I said, for a month, we'll put the links in the chat box. It's only $97 a month, folks. I went out to dinner in Palm Beach last night. The bottle of wine was, I think, the 3 manuals. I think it was like $197 bottle of wine for an average bottle of wine. So for the price of an average bottle of wine, you can get airborne with our solo Amazon service. Now I always feel like the Flex Seal tape guy, but wait, there's more. Just like when you check out, something on Amazon, it's like, hey, would you also like this? Please do this. I'm begging you. I'm not begging you. It's an order. You need the training. A lot of other places charge a couple grand for their options training. I charge more money for the live trading. The education should be a little cheaper, man. So for $195, you're going to get access to my 8 training sessions from, hey, this is the stock market, to these are calls, these are puts, to advanced tactics. This takes a building block approach, just like Navy Flight School. Navy Flight School was designed to take guys and gals who've never even seen an airplane before, and in a short amount of time, turn them into steely-eyed fighter pilots. That's what this training program is going to do. It's only $195. Okay. I totaled my Amazon trades for November, and I was in shock. Cleared 117 grand in profits this month just on Amazon. So grateful to this group for what I've learned and accomplished. I had a total of 33 Amazon trades this month that were mainly spreads and calls. Boom, boom, boom. Unbelievable. So folks, newest live trading service, usually $167 a month. You can get it for $897 a year or $97 per month. So let me just go show you the page real quick. So when you go to it, it's not a surprise. There you go. Here's the link for the Amazon monthly. Let me throw that in here as well. I think it might already be in there, but I'll still do it too. No, I think it's only allowing me to send it to the organizers. But there is if you can repost those, these are the actual links that'll take you to that. Control V, let me paste that in there. So $897 a year or $97 a month, folks. This ain't rocket surgery. Hopefully you can tell that this is a pretty good deal. So let me go back to the slides right here. So there you go. Those are the links. They're in the chat box, folks. If you didn't learn anything today, well, I failed. But do me a favor, or not me. Do you a favor. Take a little bit of an inventory of your trading cockpit. If you're my doctor buddy with like 33 positions, I don't know how you're doing it. Hell, if you're doing it extremely well, give me a call. Maybe you can be an instructor here. In 30 years of doing this, one of the biggest mistakes that I see out of an average retail trader is way too many positions. Simplify your trading cockpit with either just trading Amazon, or if the must diversify bug is running around your brain, how about you just trade XLY? It's diversified in and of itself. Okay. But like I said, I love doing this. I'm very passionate about it. And I love getting, testimonials or case studies from people like, dude, you have helped simplify my life, right? Amazon, even if they broke it up, I'd be trading the pieces right now. Okay. All right. Let's go take a look and see if we have any questions. Real quick, before I go look at that, let me give you just a little bit of an update here. You're going to learn a lot of Whizisms here at Top Gun Options. And one of them is buy the rumor, sell the news. What do I mean by that? Have you ever heard that? I have. It's a thing because it's a thing. Buy the rumor, sell the news. Look at the S&P 500 up here. We're bumping up against 4,200 here. What are we hanging on every second, or what have we been hanging on and we currently hanging on? Speaker McCarthy and Joe Biden. Are we going to get a debt ceiling deal? Of course we're going to get it eventually, but it's whether or not we default or not. And hearing Janet running around recently, she's like, well, I think I can get us to June 5th before we're really, really, really bankrupt. We're going to get a deal, folks, but I think we might actually sell the news. I think it's already baked in. I mean, the market knows we're going to get a deal. It's just a matter of when, right? So the market has ADHD. It always goes, as soon as something happens, it's forgotten. I guarantee you when we get a deal, it's going to go, all right, that's behind us. Fed meeting June, interest rates, what's the Fed going to do? Boom, boom, boom. The debt ceiling thing is going to be in the rearview mirror, and things are going to get back to, it's kind of crappy right now. So again, trade the market you have, not the one you want. And the market we have is kind of up here. But folks, if this thing even sneezes to the downside, I'm going to pound it into the dirt. And I will teach you how to do all of this stuff. I love it. Trading is a form of combat, folks. Somebody's going to win and somebody's going to get their rear end handed to them. So why wouldn't you want to use the same procedures that I used to successfully fly over the skies of Iraq or the skies of Top Gun up in Nevada in your trading? Okay. So I love putting the bomb through the window to the second, and I'm going to do that right now. So Rob, I'm going to throw it back to you. I appreciate you for having me again. Monday, enjoying your barbecues or the beach or anything like that. Just kind of either close your eyes or kind of send some love to the folks who did not make it back and who are lost at sea or lost in a field somewhere or in a jungle. And remember why we do have a Memorial Day. So thanks for having me, man. I appreciate it. My brother fights on, and namaste.
Whiz, I love your presentations. I couldn't agree with you more on that final statement of when it starts pounding, we're going to put it in the dirt. And much respect and love to all those that gave the ultimate sacrifice defending our freedoms and country. But
Thanks,
as always on point, insightful, relevant. I really appreciate and respect, one, what you do for vets, and two, the discipline and rules-based strategy you bring to the trading table. Now more than ever, we need that discipline in our trading because today's market in the extremely volatile and hostile environment, who better to guide you than a decorated military veteran? Your members always tell us how well they're doing with your service. Ladies and gentlemen, that was Mr. Matthew Whiz Buckley. You can learn more by going to www.topgunoptions.com. I put all of his links in the chat box. Thank you for joining us again today, Whiz. Happy Memorial Day to you and those that didn't make it home with you. Thank you for your service.
Thank you.
Enjoy your weekend. God knows you deserve it. Oh, with over 150 years, that's a big number, isn't it? 150. We've definitely got some trading veterans on our panel today. Our next presenter is a widely recognized author who published Trader's Catalog and Resource Guide magazine for 8 years, beginning in 1993. She sponsors the Money Mentor on the internet since 1995 and was rated #1 trader in the under $10 million category twice by Stark Research, achieving 365% profit and 178%. She just finished her 7th book, Easy Language Object Orienting Programming Made Easy. Ladies and gentlemen, here to present Systematic Trading with SunnyBands is Miss Sunny J. Harris of Money Mentor. Welcome back to Trader's Corner, Sunny. I know I always love watching your examples and, the trader made this, the investor made this, and the day trader made this. It's just wonderful.
Can you see my screen?
We can see your screen. I got Drobo coming up, and we can hear it loud and
that's
clear.
the wrong screen. I have to figure out how to get this on the other screen.
Can you move the window onto this one, or there's a little selector box at the bottom right?
Bottom right of
There
what?
you go. I got your PowerPoint up.
Well, you don't have the show. You have the presenter view. So I need to figure out how to get you on.
See the little icon at the bottom? It's kind of like the screen with the line through it. I think that's presentation mode, where it'll just make it nice, big, full screen.
Questions pane, a hand, drawing tool. Make another.
At the bottom, you see the pen, the window, the magnifying glass, and then kind of the screen. Off the top of my head, I think that's presentation mode. Or if you right click, it'll probably come up in a menu.
Well, we could just go with this, I guess, but I don't see what you're talking about.
Try doing a right click on your big slide, and it should give you an option of presentation mode.
I presented.
Try going about 3 inches to the left from where it says help on that menu. The screen with the line through it usually gives you a full screen.
Well, let's see here. Well, we're having a little technical difficulty.
I apologize that I'm not 100% sure of the button, but I don't ever get to present.
Maybe you should present while I'm working on it.
I don't have anything ready.
No one can see your screen. Waiting for next screen.
There we go.
Monitor. That's the wrong monitor. There's that part. Now, if I click, see, it's over on my 5th monitor. I have 5 monitors.
If you go down to the bottom right of the one that has the
Bottom right.
PowerPoint on it, there's an easel. Keep going down, 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 down. The first icon to the left after that little minus. All the way to the bottom right corner of your presentation.
Right here?
That one. Just to the left of that. The
Here?
easel. That should put you in full screen mode.
I am in full screen mode on monitor number 5. And I don't know how to switch monitors.
Can you drag the window from one to the other?
Well, let's see. Sorry, this is taking a little time here. Let's see if I take this up here and click the easel. Well, we're going to go with this then.
Looks good.
Sorry about that. I'm used to Zoom. I do all my communicating on Zoom these days. Okay, we're going to talk about systematic trading with SunnyBands. I'm Sunny Harris. And my passion is in helping traders. I was asked the other day, why do you help people like this? Because I spend a lot of time talking to traders and would-be traders on the phone and on Zoom. And I do it because it's my nature. When I was in grade school, I had a blackboard and a podium, and I would teach first grade. And when I was in high school, I would help all the math students understand what the teacher had said after school. So I'm just like that. So this talk is for traders who have not yet become wildly successful. If you want to be wildly successful, give me a call. It's also for people who have not traded much and want to learn, and people who want to improve their trading results. I talk to a lot of people, again, daily, who call me and say, I've blown out 3 accounts now. Can you help me? So beginners and intermediates of both types, I love to help. People call me and say they're digging themselves into a hole and can I get them out? And I do my best. You need to know that past performance is not a predictor of future results, and all investing involves risk of loss. When your capital is at risk when you invest, and you can lose some or all of your money. Never risk more than you can afford to lose. And this talk is for educational purposes only. If you want to see all the full disclosures, you can go to moneymentor.com, the website at the bottom of each slide, and click on disclosure, and it'll show you everything. All right. Most folks, I think, start out trading, investing by picking stocks. And out of 6,500, how do you pick the one that's going to go up? Well, I'm going to show you today. Not all people know how to pick the right stocks. So I'm going to be using my proprietary indicators for this talk and show you how I do it. I'm going to teach you how I use SunnyBands to trade futures, stocks, and crypto from my own account in all kinds of markets, up, down, sideways. So this is a little scan that I do on the 6,500 stocks, and it gives me the ones that are above all 3 moving averages, have appropriate volume, and the closing prices between 20 and 200. So there's a list of 44 stocks that I think are hot right now. And I am a professional trader. I've been trading for over 42 years now. And I do trade futures, stocks, and crypto. I've traded all kinds of things. I've traded bonds and crude and Forex and options and everything. But I don't currently trade options because the only thing I know how to do with options is lose money. And that's not the goal of my game. So I'm going to tell you a little bit about myself, but first I'm going to show you how I trade. This is my main trading chart. You can see that this was yesterday. And these are SunnyBands, the green and blue channel that you see price running in. And in the center, there's a gold and a purple line. This is my dynamic moving average, or DMA. Then Lower down on the chart, you have gold and red lines that turn to purple and green lines. I'm going to explain those to you in a bit, but that's my dynamic moving average histogram. And the bottom indicator I call who's on top because it shows me who's on top, gold or purple. Here's a couple of quips and quotes I call them. You can use SunnyBands for options on QQQ. When it goes purple, I go. It's a sure bet. Price crosses above the lower outer band sometimes, but I wait for a couple bars within the lower outer band. I catch it on Friday on options expiration. I sell puts, and it's a sure thing. I did it on Tesla too, he says. Another one, Don says, nice bands. This morning I did a couple of quick MES buys and sells, and I bought into an upward moving ES, which was signaled by the dynamic moving average histogram. I followed it to the top sunny band and closed. Sold short at the top, followed it to the bottom sunny band on a $4,000 account, which this is what he moved into his futures account. In one day, it returned $2,000, and he said it doesn't get any better than that. Another one, I made $57.72 on the first day of my free trial. That's surely enough to buy SunnyBands with. It told me exactly where the turns were, even with the high volatility today. You're one of the very few people that allows test drives. It's nothing short of amazing. So I have been trading since 1981 through all the major crashes that we've had since then. And if you don't know how to trade crashes, you don't know how to trade. So I've been short through all of those. And I trade the S&P 500 futures contract primarily on 1 and 5 minute charts. I've been doing it for 42 years. I've been trading SunnyBands for 36 years with no changes, no optimization. I do have long-term stock holdings. I call long-term a week or more. And I trade a little bit of cryptocurrencies, which these days are just doing the same thing as the stock market. So today I'm going to show you how I trade short and long-term charts using SunnyBands and my dynamic moving averages. I do it systematically. I am a disciplined trader, but I'm not a system trader. I trade with my SunnyBands strategy, but I do from time to time make adjustments to it. So I have about a 90% systematic system, and about 10% of it's intuitive. I do a newsletter every Sunday night called Sunny Side of the Street. If you want to give me your email address, then I'd be happy to send you a free issue tomorrow night. Just email me, Sunny. You see the website at the bottom, moneymentor.com. Just put it Sunny at Money Mentor, and I'll get it. I was rated #1 trader twice by Stark Research using SunnyBands and my dynamic moving average, which I will show you. And there you see right at the top. I grew up dirt poor in Appalachia. I now have 3 degrees in mathematics and 1 in photography. I figured education was the way out. I've been programming for 54 years, trading for 42. I was my first job out of college was as a systems programmer for Lockheed up in Northern California. I was one of the founders of ISCO, the world's leader in computer graphics software, and I retired from that company at 30. I gave my millions to money managers, and they lost $75,000 in 3 weeks, and I multiplied that out with 52 weeks and figured I couldn't afford it. So I took my money back and taught myself to read. Taught myself to trade through reading 117 related books. Now I've read 746 of them. And I didn't enter a single trade for the first year of watching the market. I still considered myself a trader because I was watching it very carefully, watching it every day to see what the rhythm was, the cycles were, and to learn the motion of the market. I did publish a monthly magazine for 8 years called Trader's Catalog and Resource Guide. And then the internet came along, and I knew paper distribution was going out. I've written 5 best-selling books, hopefully the next one will be a bestseller as well. Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, and TradeStation Made Easy. I also wrote Going Vegan with my friend, the actress Linda Blair. And this says, I'm nearly finished, but now I am finished writing the definitive guide to TradeStation's easy language and OOL programming, though I still have an artist working on the cover design, and then it will be done. I've written articles for all the major magazines. I'm still writing articles. I've got one coming out in Traders World next issue. And on the Using Easy Language website. So I'm an author and a programmer and a trader. Here's the covers of those books. Using Easy Language 9.x, I ghost wrote for Murray Ruggiero. And there's the last issue of that magazine, and Going Vegan with Linda Blair. And here's, well, that's the old title. We've retitled it, but that's the next book. I have customers all over the world, all over the world. I have one I have to call today. It's in Botswana. I have another one that's in Australia I have to call today. You have to allow for these time zones, you know. So I'm going to show you how to make a six-figure income. If you'd like to make 120 grand a year, you can't just say I'm going to make 120 grand a year and expect that to happen, because without proper planning, you're going to end up at the end of the year trying to make that 120. So if you divide it by 12 months, that gives you 10,000 a month. And that's doable, but how do you get to that? Well, there's 20 trading days in most months, so you divide the 10,000 by 20 and you get $500 a day. Now that seems a lot more doable, but it's only 5 trades at $100 each, and there's 5 trades every day. In the E-mini, there's usually between 1,000 and 3,500 available. So imagine instead of making $500 a day, if you were making $3,500 a day. That'd be 7 times that 120. So I need to know, are you a trader or an investor? An investor buys and holds for the long term, and a trader gets in and out, goes long and short, hoping to get short-term profits. I'm both of these. I do short-term trading in and out of the E-mini every day, and I do long-term trading on my stocks. It's swing trading, but it's longer term. And as I said, long-term to me looks like a week or two. And I, of course, have 2 different portfolios for that. So I'm going to break it all down and tell you how I trade and show you exactly how I do it. And we're going to look at the next picture. It looks complex, but it's really not. Color coding keys me into action. I color code things, and I use the same colors every time. So now I know exactly what I'm supposed to be doing. So this is my trading screen. This the colored bars, the blue and magenta ones, are the night session. I have a little indicator I wrote to color the night session different from the day session, which is green and red. And you can see right there, 1, 2, 3 trades. The bands on the outside of price, the upper green one, it's called my upper outer band. And the blue one, guess what? It's called the upper inner band. Lower inner band, lower outer band. And these bands tell me exactly where the trades are. Shows me that right there's the long and right there's the short. So it couldn't be much easier. It's very systematic and very easy to use. Oh, and by the way, I give free trials of this out to anybody who emails me and has multi-chart TradeStation or Ninja Trader. So you could be like Don. You could make $5,700 in a day and more than pay for SunnyBands. The colored histogram at the bottom is the histogram of my dynamic moving average difference. And it shows me when it's below the line that the purple is on top. When the purple turns green, it tells me it's time to buy. Likewise, when gold's on top, it tells me the gold line of the DMA is on top. When it turns red, it's looking for shorts. Pretty clear. So here's a typical chart of the Dow. How do you know when to get in it? I mean, it's clear to see them after the fact, but how do you know when to get in that when it's actually happening? Well, here's the dynamic moving average by itself. This is just the green and gold and purple all along there. And this calls, the crossover of this calls the long and short trades. It gives me the flavor of the overall market. But you can see it's too slow. So the SunnyBands will call the trade down here at the bottom. And here's some of the mathematics that went into developing that. Let's add SunnyBands there. And now you can see where the trades are. Here's a long, here's a short, here's a long, there's a short, quick short, here's a long again, here's another short. When the blue bars go outside of the upper band and turn red and come inside, we go short. When they're going down on red and come up in blue, we go long. And now if I add the histogram to this, you can see that this long right here is signaled by the green back here. So there's the long entry to this one. When it just goes to the DMA and drops below, I expect that, and that's okay. It's still going long. Let's talk about buy and hold versus trading. So this is the Dow again. And I've got yellow dots on it this time. And this is my PHW indicator that tells me where all the ideal highs and lows are. So you can see it marks them. And with SunnyBands and the histogram, you can get very close to these yellow dots. Now, they write something out at the right of the screen if I turn on the printing mechanism. And it gives me what the ideal profit would have been had I been able to make all those yellow dots. My PHW, though, is only 60% of the ideal, and I do that because I figure I can lose 20% on the entry and 20% on the exit and still make the 60% in the middle, which is enough. And it will print out over here to the right on the chart. It'll tell you exactly how much that is and how many trades we're taking. Here, on the other hand, is a 5-minute E-mini from Friday. You can see the horizontal red line indicates the session low, the blue is the session open, and this green line that's hidden up here at the top is the session high. I like to keep those on there because I find the market will test those prices again and again. And who's on top again is down here at the bottom of the chart. When it's dark gold, it tells me that the DMA is going up with gold on top. When it's light gold, it tells me that the DMA is flat. And that's an important caveat to the rules, which I'll explain to you in a bit. Purple tells me, dark purple tells me that the purple line is now on top. Light purple tells me that the DMA is flat. So the yellow dots again are the PHW. It stands for potential hourly wage. I wanted to know 40 years ago, can you make more money by trading than by working at McDonald's? Your hourly wage should be enough to pay you what you think you're worth, or you shouldn't be trading. And the dots are the ideal turning points. So this is going to tell you I take 60% of the ideal as my goal. So if you buy at the beginning of the chart and sell at the end of the Dow Jones, it makes $2,778. That's buy and hold from the beginning to the end of a chart. But if we trade, instead of buy and hold, we trade the highs and lows with PHW, taking 60% of the ideal. On the same chart, it's $80,000. So that's a big difference between trading and buy and hold. So how do you know? How do you know in 1982 to buy and hold Apple from now? How do you know to hold it for 40 years? So I look at my SunnyBands indicator and the histogram and the PHW indicator, and I know all I need to know. So you can see this is, here's the open of the night session. There's the high of the night session, and the low is back there somewhere. So again, I have the low of the day session in red, the high of the day session in green. And it looks like the blue is right underneath the red, because the blue one is the open. So this is what a chart looks to me, and this is on Ethereum on Friday. It doesn't matter what symbol you use or what time frame. These indicators work on them all. So you can see there's the trade, 3 trades in Ethereum on Friday on a 5-minute chart. Let's talk about buy and hold versus trading on Ethereum. So buy and hold would have netted you a loss of $170 versus $19,000 trading Ethereum on a daily chart. Just on a daily chart, just buy and hold versus trading. These things work on any symbol and any time frame. Here's, what is this one? This is the E-mini on a daily chart. This is the E-mini on a 30-minute chart. This is the E-mini on a 5-minute chart. You can see SunnyBands does the same thing on all of them. Here's Apple on a 15-minute chart, and Apple on a daily chart. So you can see that you traded exactly the same way. Long here, up to there, short down to here. Here's Apple on a weekly chart. Now I just chose these for no reason at all. They're just interesting charts. But if you wanted me to send you a chart of a symbol, just email me, sunny@moneymentor.com, and I'll send you a chart of any symbol you want. So in the same amount of time, starting at 47 cents in 1981, and the current price at the time that I wrote this was $149. The investor made 399%, which is phenomenal, but the trader made 635% profit. The day trader, on the other hand, who was working on a smaller time frame chart, could have made 1,200%. And that's why I'm both a trader and an investor. Well, is this possible? Well, yes and no is the answer, because you can't catch all the moves. According to my research, you can only get about 60% of each move when trading, and that's what's reflected in the PHW values. An investor, on the other hand, must sit through long periods of scary negative markets, while the trader can go short. A big difference. So we're going to look at the Dow again, because we're all familiar with it. It's reported daily on the news, and we all relate to these numbers. When they report the Dow's down 300 points, you just know that. You know what it means. But in the last few weeks, it's been recovering from its lows. 2 weeks ago, I think, is when I wrote this, and it gained 1,200 points that week. The Dow's down only 9% from its highs now. The YM, which is the Dow futures contract, here that is on a 15-minute basis. You can see the SunnyBands and the day-night bars doing the same thing over and over again. Here's one where the PHW is writing out the text to the right of the chart. You can see it says buy hold, BH equals that value. The ideal is the next line, and the PHW is the third line, which is 60% of the ideal. Ideal number of trades, I think that says 58, but I can't exactly see it. And the last line shows the date range of this chart. So let's look at the standard moving averages a second. They're quoted every day in Barron's, Investors Business Daily, Wall Street Journal. All the media talks about the 20, the 50, and the 200-day. I use 21 because it's a Fibonacci number, but they report the 20, 50, and 200-day moving averages. And then I'm going to get to my bullish bearish presentation. So here is the NQ, which is the NASDAQ futures contract. Oh no, I've got this labeled wrong. That's the YM. So that's YM is the Dow futures contract. But you can see the moving averages. The blue dotted one down over here, we follow it to the right, and the blue number tells me this is price is greater than the 21 moving average. The gold one is the gold line up here, and it is the 50 period moving average, and it says price is less than the 50. And down here in the dark red, we have the 200 moving average. And it says greater than 200. So I know price is above the 200 and above the 21, but not above the 50. Here are two simple moving averages on a chart. And this is not with my moving average, so it doesn't have the numbers out here. But more than likely, this is the default value of 9 and 18, 9 for the fast moving average and 18 for the slow. And this is a chart of the YM again. And you can see how price plays with these averages. So here are the trades: short, long, short, long, short, long, short. And that's with them, you taking them at every crossover of the moving averages. If you look back here, you see that the moving average crosses over a couple times. Up here, it crosses over a couple times. Down here, it crosses over twice. So simple moving averages give you a lot of false signals. Now here's my dynamic moving average, and you can see in here it did not give a signal. Did not give a signal back here. Did not give a signal through here, and then signaled long. So gold on top means long, and purple on top, which is here, means short. 1, 2, 3, 4 trades on this one, as opposed to 1, 2, 3, 4, 5, 6, 7 on the other one. And if I put SunnyBands on it, we'll see what that looks like. Now my DMA the reason it's different from any other moving average is that it calculates its own inputs dynamically. That's why I call it dynamic, with every tick of the market. So it's constantly, the 9 and 18 we had in the default moving average, it's constantly updating those every tick of the market. It dynamically allocates its own lengths. And the SunnyBands are average true ranges away from the dynamic moving average, which makes them dynamic as well, because they're not being calculated on a moving average. They're being calculated on a dynamic moving average, so they too become dynamic. So SunnyBands recalculates with every tick of the market. So now there's the same chart with SunnyBands on it. Oops, let's go back to that. And you can see this signals to go short. This signals to go long, 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 long. And here's another short signal. And I'd be happy to Zoom with anybody that wants to send me an email. I'll Zoom with you and show you how it works personally. I do all my stuff personally. If you get my free trial, I meet with you twice, even 3 times sometimes, to show you how it works during the live markets. I set it up for you, I give you the orientation, and then I trade with you. Here's a daily strategy report, and this is for the dynamic moving average, $90,000 from 2020 to 2023. That's not bad. And a lot of people ask me, is your dynamic moving average, is your SunnyBands like Bollinger Bands? Well, yes, in that they're bands, but that's all. So in a word, no, they're not like Bollinger Bands. Bollinger Bands is a simple moving average with standard deviation bands. Standard deviations tell you where the market should go, but I like to look at what the market is doing. So simple moving averages produce the worst whipsaw. I'm going to show you Bollinger Bands next on a chart. And you can see they go way out of range here and way out of range here. These are the standard deviations saying where price should go. Here are the Bollinger Band signals. I programmed up a Bollinger Band strategy based on his publicly available works. And the performance report over that time period shows it loses $3,800. But the SunnyBands signals in that same short time frame make $12,000. Here they both are together. You can see my bands are touching price all the way, keeping track of price so we can get a signal to go short when it crosses the bands. Here's my moving average 3 lines indicator. 2150 and 200 are the default inputs. You can change those to anything you want. So I do look at these on the 1 minute NASDAQ chart, and I use them because the NASDAQ plays back and forth with these 3 moving averages all day long. Here's the Dow. Again, we've got the 3 moving averages on there, and you can see at this point price is above all 3 of them. And I had this indicator because I couldn't always tell. I couldn't always remember, is the blue one the 21 or the 50? So I made it print the numbers out and also a greater than or less than symbol to tell me where price is at a glance. When I'm trading, I don't like to have to think about anything else but entering the trade. So I use color coding and ease of use indicators to make everything obvious for me. If we look at a weekly perspective, YM again, you can see the 3 moving averages, it's above them all. And purple's still on top, which tells me to exercise caution because we're not fully bullish yet. Likewise, on a 15-minute chart, same thing, averages and price signals on the SunnyBands. So here we go long, ride it up to here. We get a short signal here, but it's not confirmed, so we don't go short there yet, and it comes back up again. Now, here's how I personally trade. First thing I do is I put attractors on a chart. Now, attractors is a word that I coined to describe support and resistance, moving averages, indicators that you put on your chart, anything, or Fibonacci lines. And I call them that because price is attracted to these lines in the sand. It was coined to describe all kinds of support and resistance, including moving averages where price tends to revert to the mean. Next thing I put on a chart is my SunnyBands indicator based on my dynamic moving average. And you can see here again are the 3 moving averages on the chart. And here I'm expecting we've got above all 3 moving averages. And I'm expecting at this point for price to move on up since it's also above the 50 now. And the 21 is going to come up and go through the 50, making a bullish signal, and we watch for longs. Here's how I trade attractors. You can see the orange lines, and I make my support and resistance orange at all time. All of my attractors are orange. And you can see I mark the confluence of price. So right here, we've got a lot of prices touching this area, so I mark that. Then back here on the left, we've got an attractor. That's where I drew it because it goes up, hits, and then goes down. And if you go back over here, you see price, all hitting that attractor. Likewise, at the top, I've got 2 attractors where price is just moving sideways, trying to explore, but not getting anywhere. And with SunnyBands, I trade when the red bars come down, touch the bottom band, lower outer band, and turn blue, and they have to be confirmed. So right there's the confirmation. Here's a short. And now if I bring it all together, you can see all of them on one chart. To choose, I don't short stocks. I only go long and then sell out when I get a short signal. So I buy and hold, waiting for the sell signal to take the profits. And the next chart tells me which are above all 3 moving averages and whether my DMA is bullish or bearish and what the potential profit is. So these are in a TradeStation application called Radar Screen. And I have the S&P 500. So I've got 500 stocks on here. This is the Radar Screen version of PHW. And you can see in the yellow, that would be equivalent to the yellow dots. You can see on this one stock in VR that I have them sorted by PHW. So the highest is on top. So $18,000 is the PHW, which is already 60% of the ideal. You see the ideal in the white column, 31,000. And buy and hold is in the green, it's 2,000. So buy and hold is 2,000 versus, I think that says 18,000. Could be 16. I think it's 18. So the yellow dots are equivalent to this yellow column. The next one I have over is my 3 moving averages. And you can see where it's all green, it's above all 3 moving averages. Where it's green, green, and then red, it means it's above the 21, it's above the 50, but it's below the 200. Here's a good stock. If you go short stocks, it's below all 3. So it's light red in all 3 in the column, the row. And this third one is my dynamic moving average. And it tells me in these gold cells, it tells me that gold is on top, so it's bullish. And the 2 slashes means it's moving up. On the green one, it's bearish, and the signal says it was moving down, but now it's moving up. So I look for turning points that way. The red, 2 slashes moving from the left, means it's bearish and going down. Now, I don't have any purple on this chart, but the purple would say bearish moving up. So I look at the 3 moving averages. I'm scanning for all stocks above these 3 moving averages. And when I find stocks showing all green cells, these are still bullish. And here's the scanner results. So you can see these are all proper volume, and it's true that it's above all 3 moving averages. So there's 68 stocks that are worth trading. Here's Tesla. We're on a 15-minute chart with SunnyBands and the dynamic moving average histogram. You can see over here, BH is in red, telling me that buy and hold is a losing proposition, and it gives me all the PHW values to the right, so I can see what's what. Here's Tesla on the daily chart, and it's up around the DMA now. When we have a flat DMA, that's the caveat I was going to tell you about. When it's flat, like over here, I know the market's going to be choppy until we get out of this flat configuration. So let's do the same thing for the ES. No one trades the big boy anymore, the S&P. And while it was active, I traded 20 contracts at the big boy at a time. The margin was 50 grand, and the E-mini is the current thing that everybody trades, and it is 1/10 of the big boy. So the margin today, today I think it's 12,400. It changes regularly. And the ES got started in September of 97, but it's not as recognizable as the Dow. So, I mean, you might know what down 300 points means on the Dow, but what does down 47 points mean on the ES? I don't know, and I've been trading the thing for 40 years. It is the most liquid commodity, and that's the main reason I trade it. It's the most liquid and the most profitable. So here's the ES with the 3 moving averages, and you can see that, let me go back to that. You can see that this really doesn't give you an answer of where to trade. I mean, I like to watch them to see where price is playing with them, but it doesn't give me an idea of when to go long and when to go short. Here's SunnyBands on the 5-minute E-mini. And this is my main chart. This is what I'm looking at all the time. On the 5-minute, I go long and short, and there's usually 3 to 5 moves during a 6.5-hour day. And yes, I watch it all day. Some people tell me that they only want to trade the first hour, which, I mean, that's fine, but what if you do that on Friday? You trade the first hour and you make $500, and then the rest of the day it goes screaming straight up. So I trade it all day long. It's very systematic. I look at the attractors, I study the histogram, and I use the SunnyBands. I trade the E-mini on 1 and 5-minute charts. and I trade 3 to 5 times a day. With equities, I buy and hold for weeks to months, sometimes even years. If it's on a steady incline, no reason to quit. This is my YouTube channel, and I have videos on how to use TradeStation, how to use SunnyBands, how to use the dynamic moving average, how to install the indicators. I have all kinds of helpful little videos there. My website is moneymentor.com, and that's what it looks like. My phone number's right at the top if you want to give me a call Pacific time. And my email is sunny@moneymentor.com. And what I want you to remember is education is not expensive. Lack of education is. Products I have programmed were all developed for my own use. I make them available to other people, and no, I don't give them away free, but they're developed for my own use. And they're the only ones I use. It's everything I use today. And I show you exactly how I use them. I don't hold anything back. I don't keep any secrets. I don't keep any secrets about how I use them differently from the way I'm teaching you. And I do train you to use them for free. I'm always available by phone or email, so feel free to get in touch. There's free stuff on my website too. In January, I did a 4-week strategy trading forum. All you have to do is go to Money Mentor and click on membership, become a free member, and set your password, and then you can access all this stuff for free. In April, I did a technical analysis forum. That's available. In July, I did a 5-week easy language forum, which is available on Money Mentor, but it's not free. It costs a whole $79 to learn easy language. I offer education and consulting, easy language programming services. I do custom programming. I did write the book TradeStation Made Easy, so I'm a native-born speaker of easy language. I've been using it since 1986. I offer mentoring. I have a complete bookstore with only trading books in it. And I do a distance learning course. The indicators I use myself in my own trading are what I make available. I don't make available things that I don't use. I don't just write indicators for the fun of it. I only write them to use in my own trading. And on Tuesday mornings, I have a live trading room for an hour, 7 a.m. on Tuesday mornings. I also do Sunny Side of the Street on Sunday nights and send that one out. These are both by subscription. So I have a special offer. If you want a free 7-day trial, you email me sunny@moneymentor.com or give me a call. I'm in California, 760-908-3070. Better yet, if you text SunnyBands to me, we can start your free trial just by putting the word SunnyBands in a text to me. I even personally meet with you on Zoom to install and trade in the live markets to get you started. On the 4th of every month, whatever day that falls on, at 1:15 Pacific time, we have a happy half hour where new and seasoned traders alike get together to chat and share notes and ask questions. I also have Sam Tennis on the happy half hour with me. He's the guy that wrote Easy Language in the first place and created TradeStation. So to get the link for that, you have to register at moneymentor.com. And these slides will be posted. So if you sign up for a free membership, at membership, click on the membership button on the top of Money Mentor, and you can have access to these slides. So you just go to moneymentor.com and click on membership. Where's the chat? Let's see if we have any questions.
Sunny, you had a couple, but you had answered them all. And just in the fact of being fair to the next presenter, I am intrigued. And I remember seeing your presentation the first time and thinking, you know what, she even offers a free trial. I have to try it. And when I do get the availability during the day, I have a young child. You will probably see me in your chat room.
Fantastic. That'd be great.
It's amazing how your bands work in either bull or bear markets, short or long term. They look
And
like a
for
real must-have for all
yeah.
traders.
Do we have?
Sunny,
I can't see the chat room. Do we have any other? Oh, here it is. We have any other questions?
how long is the trial for?
7 days.
And do your shark indicate, or does it support Shark Indicator's Bloodhound?
I don't even know what that is, so I guess the
I,
answer is no.
we will take that as a no. Sunny from the other coast right outside of New York City, I'd like to wish you a wonderful Memorial Day weekend, and thank you for making such a generous offer for our members. I look forward to reading your
Absolutely.
latest book, and I'm sure our paths will cross in the near future.
Excellent. Thank you, Rob.
Have a great weekend.
You too. Bye-bye.
Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you the most credible and qualified traders to participate on our shows. Up next is one of the most respected technical analysts and traders in the industry, with a high reputation for accuracy in both bull and bear markets. She began her trading career as an equity swing trader in the mid-1990s and since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and foreign exchange. Here to present Mastering Market Pivots is Miss Toni Hansen. Welcome back to Traders Corner, Toni.
Hey, good day, everyone. Hold on one second. I am just pulling up the correct screen here for y'all.
I saw
All right,
charts. That
great.
always seems correct to me. Oh, okay. Now we see a
Well, of
PowerPoint
course, right?
presentation.
All right, folks. Well, thank you for joining me here. I know you guys have a really good lineup. You always do. And I'm very honored that you've asked me back over and over again to teach some of what I know about trading and the markets. I've been trading for, well, since 1996. So you do the math there. It's been a while. I think the great thing about these sessions here that Rob offers is the fact that you get to see a lot of different variations of trading strategies that have worked for traders over a proven amount of time. We see so much stuff about cryptos and fast markets and people just wanting to make a dime and flip things over on you really fast. And they're just looking to make money off of your subscriptions and what they can get out of you. It's not about teaching you guys how to really trade and stick around for the long term. That's what Sunny and myself and others that Rob has invited, that's what we do. We want to see you guys succeed just like we have over the years. And so we want you to learn some of the strategies that have been proven to work over time. And what I want to share with you here today is just a little bit of the information that I've learned over the years regarding timing market pivots and how we can time these stronger reversals in the market, when we can expect to see pauses in a trend, when we can expect a trend to go and flip over on us. And I'm going to show you examples that cover a number of years here so that you can see that these really are things that are going to work over time. It's not going to be something that, oh, hey, you'll just see it today and in today's market, and you're not going to see it continue over the years. So as we go forward here, I want to recognize a common thought, I guess. Everybody says you can't really pick highs or lows. Well, you guys, that's actually not true. Humans as a whole are really very predictable, and charts are just visual representations of human behavior. Subtle changes can impact movement, and that's where technical analysis really gets into the groove of things, because we're looking at, and Rob, I know you still got your microphone on there. I don't know if you're aware of that. But what we are looking for are these repetitive patterns. And an interesting thing about looking at charts as a way of trading the market is that it doesn't really matter what human behavior we're looking at. In fact, when COVID was, first hitting, we often looked at the COVID infection rates and how those predicted the next upcoming waves of COVID. And it was really interesting because the charts looked almost exactly like you see in charts of the market. And that's just because you're just seeing patterns of human behavior over time. I come from a background, I was actually trained as an anthropologist, an archaeologist. So studying human behavior over the millennia is something that always fascinated me. So when it comes to looking at the markets, we really can predict very closely a lot of the major highs and lows. Now you have to drop down to smaller time frames and look at, some of the individual things. In fact, when I started developing my trading system, what I was looking at were individual components in technical analysis that can impact a move. So when I came into trading, there wasn't much out there as far as technical analysis. In fact, it was pretty much viewed as, kind of voodoo. A lot like a lot of people view psychology. They don't believe in it and they don't feel that it has validity. And what has been shown to me over and over again is that no, you can't take like a simple thing like a 5-day pullback into moving average and expect it to take off. That's not going to happen every time. What we're going to need to look at are more of the details of those corrections, more of the details that go into the development of those trends. So I look at 5 core things in the market. I look at trends development, I look at time development, I look at momentum, support and resistance levels, and volume. And all of those can get to be pretty complex, but they have rules that are going to repeat over and over and over again. Now, I used TradeStation for many years. I currently use primarily NinjaTrader. So the charts that you're going to see are going to be from the NinjaTrader platform. And that's what I use personally for my trading these days. This first chart that I show you, this is one taken from earlier this year. And these were live calls based upon the market action that we were seeing for performing at that time. And what I want to show you here is that we were able to look at these trend reversals and pretty much nail where those reversals were happening. Now, what is important about that slide is that that one took place several months ago. But come into this week, we have that same pattern that was developing. So that helped us look for reversal patterns that were happening in today's market this week, not months ago, not looking at, oh, hey, you made a correct call months ago. I do a live trading room every single day from noon to 1 o'clock Eastern. So these are real-time analysis that I'm making on a daily basis with very high accuracy, but it took a long time for me to get there because I didn't have somebody showing me the ropes. I basically had to learn by just getting thrown into the pool and figuring out from there how to swim without drowning, which is very tricky. Also very tricky when you're looking at it in the markets as a new trader without a lot of support, with no system and with no mentor to help me pick out the things that they did wrong to help kind of overcome a lot of the mistakes that they made much more quickly. And I definitely made many, many mistakes, especially in those first 5 years. But one of the things that I did that really helped me was from the very beginning, I shared what I was doing. So we didn't have blogs or social media type of outlets back then, but I did start writing about what I was doing from the swing trading side of things. I was trading stocks and looking at holding things for a couple of days to a couple of weeks. And I started writing about the setups that I was looking for, the things that I thought were pros, the things that I thought were cons. and just sharing that on swingtrader.net, which was my original trading site. And from there, it caught the attention of some of the other educational firms that were just getting started as well, and asked me to come in and do analysis and share with their traders what I was doing. And from there, I found myself on the educational side of things, but it was really a pretty natural transition from the way that I approach everything in life. My parents were both in the education field, so it was how I learned growing up, was also sharing the things that I learned. And what that does is it helps you explore areas that you might not have thought of. So, for example, I might get a question, well, how did volume impact this reversal? And the only way you can answer that question is by studying volume. Go look at the strategy over and over and over and over again, constant repetition of the same characteristics that are developing in the market and how one trait impacts the success of that strategy. And when we look at reversals and market pivots, there are some traits that are really easy to pick out, and I'm going to show those to you here today. But also there's going to be more intricate details, and those take a little bit longer to learn because you might not see them as often. So the first thing that I want to share here is just the fact that markets are repetitive. We do see human behavior playing out over and over again in these fairly predictable ways. Now, the momentum of a move might shift and be a little bit different, but a lot of the core traits are the same. So here's the setup from February of earlier this year. And this was that core market reversal leading to the pivot of a nice strong uptrend. But if we look at and compare the action this week to what we saw back there in February, we have a lot of the same type of shifting happening at the highs. We have comparable initial patterns of development, but then we have a little bit of a change in terms of momentum and how that's playing out. So over here, we start out a little bit slower. Over here, we get a little bit quicker and shift at the end. But overall, same type of pattern here, just a little bit of difference in terms of the momentum on how things are getting going. And if we go and kind of break down some of this action and we look at, hey, what's going into the details that are helping with timing these reversals, that's where you guys can start to learn how to do it in a live setting. So one of the core things that I do every day at noon is we look at ongoing development in the market. We look at, hey, what's happening now and what are the most likely outcomes based upon what's happening. But not only that, if something shifts, how can that impact the upcoming outcome as well? And we're going to look at that here as I go through today's class, because I'm going to show you what's happened this week versus what we were looking at for the probability of what was going to happen. So one of the first things that I look at when I'm looking at trend exhaustion and areas of where I can start to watch for pivots or reversals of the trends is to look at what we call those impulse moves. And an impulse move is just a stronger than average momentum move where we see about the same change in price. So you want to look at, hey, what's the size of that trend move and the same momentum, meaning the rate of change in that price. So when we have similar momentum and similar changes in price, that tells us, hey, that's an average impulse move. And what that can do is that when we hit those levels of where we're seeing those average impulse moves, it tells us that, hey, we're more likely to see exhausted action start to come into play. This can mean a greater probability of market pivots taking place. Now, it doesn't ensure that we're going to get a really strong V pivot, but it does tell us that the conditions are there for reversal strategies to develop. So we can see here, similar impulse move. I'm not counting it from this high because there's this larger correction in here that takes place. And in these upside moves as well as this downside move, you'll notice that those corrections are smaller. So what we want to pay attention to are impulse moves that in those also have similar corrective moves where when you add up all of those little small corrections, you have about the same amount of time. Now, what that could mean is a stronger initial drop and then a zone of correction like that, so that you see a little bit of a larger correction, but the overall momentum stays the same. But those are the core traits that we're looking at in the impulse move. So that's one of the first things. And it's something that is fairly easy for newer traders or struggling traders to start to begin to feel out. Now, impulse moves take place on multiple time frames, so they're fractal in nature, just like everything that we're looking at in technical analysis. So we also will see them forming on smaller time frames as well. And when we see measured impulse moves on those smaller time frames that are also corresponding to those measured impulse moves on the larger time frames, that creates an even stronger level of where we can get a trend correction that has the highest probability of breaking that trend channel. So whether that trend channel means a nice strong reversal or whether it might just lead to a longer correction, at least we have a good feel for that being the zone that we want to start to watch for those setups to format. Another thing that we look at is momentum. So you guys will see me talk about momentum a lot in basically every single talk that I've given in the last 24 years or so. I've talked about momentum. And it's interesting because this isn't something that was originally discussed much in technical analysis, and yet it's so crucial. I used to call it pace, but really it's just momentum, which is just your rate of change over time compared to previous movements. Now, you'll hear me talk about average momentum moves, slower than average, stronger than average. Really what I'm doing is I'm making a comparison. So an average market move often just looks like a V, but we will see a lot of overlap in many of those movements. So it's not just a really sharp move down and a sharp move up. That looks like a V as well. We want something where there's a pretty decent amount of overlap and then it's punctuated by these stronger little impulse moves on the smaller time frame. And that is what is typically an average impulse move. And you might have to look back further in time to see, hey, how does this move really compare to previous ones? In fact, one of the problems traders get into is that they'll focus on how momentum looks on a smaller time frame, but they don't back up to a larger time frame to see, what, is this really an average momentum move or is it a lot stronger? And so what we're looking at for trend exhaustion is when does that momentum begin to shift? When are we seeing a change in that momentum? And sometimes one of the first clues is that when we're looking at our trading channel, we start to see trading that is occurring at one end of the channel over another. So for example, here on our downside move this week in the NASDAQ, what we saw was that the market was coming down pretty strong. We saw, that average impulse move take place. And then we saw a correction where the market didn't really shift momentum yet. It went and it pulled to a lower low. This is a pattern I call it 2B, which just stands for two bottoms. And in that, it held within that upper end of that trading range of that channel. So that's one indication that we have a market that has a higher probability of going into a longer correction. Now, when that also has a shift in the momentum, even when you're starting to see, you're still seeing these lower highs taking place, but when you're starting to see changes in that momentum, that's going to give us an even greater predictability that our trend is actually flipping. And it doesn't mean that we will start to always see, those higher lows begin to take place. Sometimes that momentum is going to shift like this, where we'll still see lower lows developing, but the rate of change in that movement begins to shift. And that momentum shift is also really crucial to timing market pivots and timing reversals. One of the very first reversal patterns that I trade is the 2B. And that basic pattern looks like this. So what we're looking at is something that's coming in a downtrend. We get a higher low and then a lower low. Here you'll notice it's pretty comparable. So I usually refer to these as a tilted 2B. But what you'll notice is that our distance here, as it's breaking down, is bigger here than it is here. So we really have these smaller two waves of trend development that are happening. And the stronger 2Bs will have a shift in momentum where we'll have this larger, more rapid move here, and then you'll see that slower change in the momentum of the channel over here. So even though it's making those lower lows, it'll start to shift the channel. We didn't have that happening here. So in this particular one, yes, we have that pivot here that is at that comparable impulse move, and it's in the upper end of that trading range, but it's still going to have a higher risk that it could go and do something like this, where that would change the momentum of that overall channel. So what we see as confirmation for our pivot is the fact that this goes into more of this gradual channel here. This is actually a pattern called an inverse head and shoulders, and the right shoulder is something that I call a phoenix. And it's one of the stronger reversal patterns that there are in the market. You'll notice one of the traits here is pretty even time development between those lows. So that's a clue that we have a really good chance of getting that pivot reversal actually confirming with a stronger trend reversal as well. Now I'm going to pick up the pace here a little bit. I know we got off to a little bit of a slower start here, but I've got a lot of slides I want to show you, and they're really just going to support what we've been talking about so far. So when we're looking at these trading moves, these trend moves that are taking place, when we see those shifts in momentum, that's a good clue that we have a really strong reversal that's beginning to develop. And if we are in the midst of a really strong trend, you have to pay attention to things where that momentum begins to shift within your channel. So again, in the larger channel here, you're starting to see this forming into a correction at the upper end of that channel. And that's developing that phoenix there. We don't have the inverse head and shoulders, but we still have the phoenix where our momentum has shifted. And that's allowing for that stronger reversal to come into play. And it's the same thing that we again saw here this week as well, leading to our reversals here, which made them more easily predictable. So our Russell chart here, this is from 2001, but it's the exact same pattern that we were seeing off of the lows this week in the market as well. And then here's another one, again from this week, and this is as we were heading into the weekend here. Notice again how that's holding at the upper end of that trading channel. So it's going and putting in that change in that channel. And as it breaks that channel, that's bringing in that stronger momentum as we were heading into the end of the day there. Here again, you guys, this is also from this week, and this is showing you that trend as it's coming to an end. So what we saw here was that average impulse move again, which tells me, hey, watch out because the market has a better chance of starting to shift. And again, that doesn't always mean a full reversal, but it does mean that conditions begin to become better, that a larger reversal can take place. So that first clue is that exhausted impulse move. And then I want to look for things like the measured moves and the changes in momentum. This is a specific strategy that again repeats over and over again. It starts with what we call the false first high. And then we get this V happening and these three highs where the difference between each of those highs is right about the same. And the size of those last two waves again give us those measured impulse moves. So this creates what I call a momentum reversal because you're basically just reversing the momentum. And it's one of those absolute pivot strategies like the 2B. Now, the opposite of the Phoenix here is the avalanche. So again, we're looking at that change in the momentum. We still have higher lows. Whoops, I changed my screen there. We still have the higher lows though. We just don't have that higher high. So as that's forming, it's actually creating that move that can be termed, your right shoulder if you have a head and shoulders. But it's also that avalanche where you don't have to have a left shoulder over there. You can just go and have that change in the momentum and the breakdown. I'm usually looking in terms of waves of 2 on these corrections. So what we're looking at is a move where, again, it's in either the upper end of the downtrend channel, or if you're looking at your uptrend channel, you have something that's holding that lower end of the trading channel. And I actually like the ones that sort of break that channel a little bit and then start to form. So it actually has a little bit of a puncture of the channel first. That's going to have higher predictability of a true trend reversal. Whereas if it's still within the channel, you could get a pop, but then still start to see, a lower low where it's kind of changing that momentum on a larger time frame. So by having it actually break the channel here, even though the first move up is much stronger than what we see on the reversal, the probability of getting this impulse move right here is actually stronger that we would get a two-wave movement than it is right here, just because of where that placement is within that bigger trend there. So that's something to keep in the back of your mind there, or make a note on. So even though it might not be as strong of a reversal, the probability of the reversal is higher. And that's something that I really had to dig into and look at a lot when I was going through my trading journal. Not just, hey, did this really get a strong reversal pattern, but what was the probability that it would give any sort of reversal to the trend? So when you are breaking and puncturing that upper end of a trading channel before you get your reversal, you've got a better chance that that reversal is going to hold. So if that punctures that channel, that's a stronger setup than if you get a pattern like that, where we're seeing the shifting momentum, but it's still within the context of that bigger trend channel. When it is within that channel, keep in mind, hugging the upper end of that channel is going to be better. So when it's trading in the upper end of that channel, that is going to be a more predictable reversal as well. So here again, it's just another avalanche. And this was back in January when we were talking about some of the intraday patterns back then, but you have that same shift taking place. So we get that change in that momentum along the highs here, and then changing that momentum again with the 2-wave correction. This ends up doing a little baby head and shoulders here. So we actually see that momentum change a little bit further here as well. But same type of pattern there that's happening here. One of the things that you guys want to look for too is the volume in that shift. So again, here's another one. This one was on oil, and we were talking about that exact strategy and how it can go and flip and what predictions or expectations would be on the flip as well. So notice again that shift in that momentum here, and then that smaller shift again as it's kind of at that lower end of that change in that channel. That's a really strong reversal pattern that you guys are going to see in any market that you trade. So you can basically take this as a template and use it in your trading. So watch for that momentum shift to happen. It's a very basic idea, but it's also very, very strong idea and strong concept leading to those reversals. Here's another one. Again, this is looking, back in time. This was from a previous class I did, but it's the same idea. So see how on this 2B here, we go and we get that larger spacing here, and it's basically staying in the upper end of that trading channel, leading to the reversal. Nice measured impulse moves here. We actually get that shift in momentum on a smaller time frame here. And volume, we've got a stronger influx of overall volume here than we do here, even though it's going to a lower low. And then as it's hugging the upper end of that channel, the volume is dropping significantly. That is another clue to look for those stronger trend reversals. And again, nice even spacing here. So you're going to see this pattern repeating over and over again. And I also use a tool called a Fibonacci fan. Now, this is something, here's the basics of how we do the Fibonacci fan. You're basically just going from your low to your high of these impulse moves. But the key to it working successfully is that your impulse move needs to be an average to slightly stronger or slightly weaker than average move. If it's substantially stronger than average, you can't use your Fibonacci fan by just going from the low to the high. There's other rules that I use for making the fan adjustments, but this is just the basic one. And when it's coming into that 76.4% fan, that's that really dark one that I've got here, 76.4. That is usually a very strong zone to start to watch for your correction to end and the new trend to pick up. So we use that a lot for timing those reversals. And in the best ones where they reverse strongly, it's not quite going to hit that channel when it comes back and pulls back for a second correction. And in fact, if we look at the NASDAQ this week, as it was coming off of the lows this week, it didn't hit that channel and we just took off from that level. So getting what we call a no touchy in there, if you get that second pullback, that's going to lead to that stronger move. So the fact that it actually hit it here, it kind of prepares you for the potential that, hey, your continuation or your reversal from this correction could be weaker, especially if it just punctures the channel made from these first two lows. If it punctures that, it's usually going to have a much harder time breaking higher, and you would want to look more for that reversal. Here is, as we were heading into the weekend, the same technique for reversing the market as we were going into the weekend here. So you can see again, you're going from your lows to your highs here. It's a little bit stronger than average. Actually, in real life trading, this is something where I make an adjustment on the trend or on my fib fan, where I hook up this low here to the 50% fan. But I'm not going to get into that today because that's just going to develop a little bit more confusion for you. But there's ways that I've looked at things over time where I'm like, hey, you know what? If I put the fib fan here, it doesn't work. How can I play around with this fib band so that it works predictably in the same set of circumstances? So in a market where I have a substantially stronger than average move on the upside, can I still use the fan or is it just worthless? So I played around with making different adjustments, you know, looking at pivots at 50% or 61.8%, how they compared to time development on the upside to know, hey, which one do I use? And these are things that take time. It's using what we call growth mindset. So you're looking at possibilities and ways you can improve and not accepting just, oh, well, hey, sometimes the fib fan doesn't work. You know, what are the rules for when it doesn't work? Can you still develop ways that it would work that hold up over time, that follow the same rules time and time again? And that's what I have spent my entire career doing is if something's not working for me, find out why. And is there a way that it does become more predictable? And is that something that can be repeated over and over again? So looking at using our fib fans, this is a technique that works really well, especially for helping newer traders learn the ins and outs of it. For those of you that are using NinjaTrader like I do, there's not a fib fan tool built into NinjaTrader. I do have an add-on for it. It's fairly inexpensive. I think it's like $79 or something like that. And it adds the Fibonacci fans to your NinjaTrader, and it also has a pretty in-depth class on how to use that Fibonacci fan. So it gets into more of those details that we just don't have time for here today. I don't use a lot of indicators in my trading. Fibonacci is basically the only one that I use these days, and it's kind of like a crutch for traders. You know, it's something where it works. It's very hard to argue that it doesn't work because there's so many ways that you can use Fibonacci for looking at things. You know, even time development with Fibonacci is very important. Looking at projection points, very important. But what I want to share with you here just as we end, you know, projections made over noon last Friday were that we had an exhausted trend and we would most likely see a bigger correction and see that play out as we were heading into the new week. And what I want to share with you here are some of the ways that I do that live analysis. So we were looking at trend exhaustion. So you can see those impulse moves and how those come into play. And also one of the things that I call a time correction and how that time development comes into play. So when we're looking at trend moves in the market, when we have two corrections that last about that same amount of time, that's a pretty good indicator that the trend is becoming exhausted. You're more likely to see some sort of correction begin to take place. Now, here's where we were trading during that class last week. And what we were looking at was, hey, if that time development doubles, it can shoot up and then do a bigger correction, basically ending the trend at that point. So what we were looking at was, hey, you know what? That is where the momentum began to shift there. It did see a correction that lasted, 3 times as long as those previous moves, but it was still shorter than the overall trend. So we were looking at, hey, this can still do that fourth move because the momentum is shifted and rounded after that 2 waves of correction. So this can still go. You can see that shift that I drew here in red a little bit better. It can still pop up and put in some higher highs, but there's a couple of ways that it could do it. It could do it by coming up and having a little bit of a reaction off of that previous high and then changing the momentum and reversing. You can kind of see my red little reversal over here. Or it could keep that momentum, go to a slightly higher high and reverse at that level. And that was the template that I drew here as well. So these are some of the things we're knowing that way that trend develops, knowing, hey, how many impulse moves can we get in a row that are comparable before we get some sort of reversal? Those all come into play here. And here's how it played out. So what you'll see is that those predictions based upon the impulse wave development, looking at the time development, we ended up with basically a hybrid of those. It put in that slightly lower low. So we were looking at ways that it would shift momentum and then reverse. And it didn't do it with the 3 highs, but it did do it with that smaller shift that led to the higher highs. So we basically ended up with a hybrid between those two as it ended up forming. And this is what led to a predominantly bearish bias as we were heading into the weekend. I focused all on the downside. I wasn't looking on the upside as we were starting out the week. And then here's where that momentum shifted. Again, that ended that trend. Again, those measured impulse moves that we were seeing on those previous charts. So these are very simple techniques that we're looking at. Here's what we were looking at yesterday. So this was trading just under that 100% Fibonacci extension. Here's the reversal with that shift in the momentum, where it was hugging the upper end of that trading channel, changed the momentum. Here's that no touchy zone I was telling you about. We didn't hit the lower end of that channel on that second correction. That allows for the stronger reversal. And as we were heading into noon on Friday, momentum was still really strong. We had that smaller shift here, which did lead to a little bit of a correction, but it wasn't enough to turn things around. It pulled up through that 76.4% price extension with an overall momentum move that was stronger than what we saw over here. So we were looking at the potential for this to push up through that level and then this going into a widening up zone, basically meaning, hey, momentum is stronger than average, so it's harder to get a really strong reversal coming into play. It just increases the probability that we're going to get more of this bigger back and forth action. And on the larger time frames, the strength is even more apparent. So it is harder for this to flip as easily without getting some of the smaller micro changes in momentum to shift. So we could look for patterns like that on the larger time frame now, where this becomes more of that false first high, and then we see the momentum shifting. But it's a good zone to expect things to begin to widen up and have a harder time continuing with that exact same momentum here. So this is just an introduction to some of the things that I look at as far as trend exhaustion goes. These are things that you can visualize pretty easily. But I have a number of courses that go into things in a lot more detail. One of them is generating an income with the growth mindset trading. And again, that is the type of approach that I took to the markets from the very beginning, you guys. How many of you have heard of growth mindset? I know it's become kind of a catchphrase these days. We see that a lot. But it's something that I've written about, for years, well, for decades here now. And not using that term, but the same idea. And it's looking at the details that go into a strategy. So in developing a template, a bull flag isn't just a slower correction into support. That's not going to tell me, hey, that is actually a buyable correction. You have to look at the details that go into that correction. Is it hugging the upper end of that channel? Is it dropping in volume? Do we have Fibonacci support or moving average support? All of those things work together to create the stronger strategies. So I go over how to use that growth mindset in trading. It's a 5-day mentorship that is now available on demand, and it shows you a lot of stuff using step-by-step walkthrough of what were live trades at the time that I was doing the class as well. And I also detail one of my favorite strategies that we touched upon here today, and that's the Phoenix within the Head and Shoulders, but it goes into the specific details that you're not going to find if you go and Google Head and Shoulders trading. In fact, if you Google Head and Shoulders and you look at the individual ways that people tell you to trade a Head and Shoulders pattern, your initial walkthroughs on how to trade it are going to be completely awful, you guys. You do not want to follow them because you're going to find as many examples of them failing, in fact, probably more than when they work out. I think the very first one comes up from like Investopedia or something like that. So it comes down to a lot of those details instead of just looking at, hey, this looks like something where we get a slightly higher low compared to before. So we can go to a higher high. What's actually happening in here? How fast is this pulling off of the low? What is the volume doing at this low compared to this low compared to this low? What's the momentum like? How many waves that go into here? There's a lot of details that go into this, and that's what I talk about in this class and teach. And the class is only $100. So you've got a 5-day mentorship program that goes into a lot of detail and also works to help you develop your own strategies and your own growth mindset and go from there. So I want to thank you all for joining me here today. I've got a boogie. I'm running my mom to the airport here, but thank you for taking the time out of your Saturday to learn from all of us, and we hope that it helps you in your trading here as you go over the next couple of months to next couple of years to next couple of decades.
Toni, I cannot thank you enough. I cannot tell you how brilliant I thought the things you went over were. I loved the bit about the no touchy. It's the story for another time if you ever want to talk offline. And the charts and the patterns and the everything. We know it's what 90% of people are using, and they don't necessarily know all the caveats. And we know what percentage of people are losing money as well.
Yeah.
But great information, mastering market pivots, great topic. Thank you for sharing your professional insight with our audience. I can see why you are one of the most respected technical analysts and traders in the industry. Ladies and gentlemen, Miss Toni Hansen, and you can find her at tonihansen.com. I put the link in. I'm probably going to use it too. Toni's reputation for accuracy, bull or bear market, is unparalleled. Toni, you're a breath of fresh air for the industry. Thanks again for joining us. Please come back and see us again on Traders Corner and enjoy your holiday weekend.
Definitely. You too, everyone. Thanks again.
And safe travels to mom.
Oh, thank you. I will pass that along.
You're welcome. Well, ladies and gentlemen, I mentioned at the top of the show we had a great lineup, and I hope everyone's listening closely because our next presenter is a graduate of Syracuse University and has been trading the financial markets for the last 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Thank you, Rob. Thank you. I really appreciate that introduction. And I want to wish everybody a very happy Memorial Day weekend as we remember the sacrifice that our veterans made, the ultimate sacrifice. And we honor their memory on Veterans Day. And I'll tell you, I'm very patriotic, and it's more than just having an extra day off of work. It's it's really a tremendous sacrifice they did, and we really are grateful for their service. So with that being said, thank you everybody for joining me. We've got a great presentation today. I'm going to be showing the AI Auto Trader, and I made a commitment several months back to get this system consistently profitable. And let me tell you, I've got a lot to share with you today. Stay around to the end. I've got a great Memorial Day special sale that I'm going to offer you. And stay to the end. I'm going to get through it quick. I know everybody's been here a long time. It's been a long day. It's been a great presentation today on Traders Corner. A lot of brilliant speakers and great information shared. So let's keep the ball rolling. First, we just want to satisfy the CFTC and just mention that all signals and trading opportunities provided by me here today are for educational and demonstration purposes only. I am not a licensed trade advisor. It's a good idea before you take a trade to consult with one. There is a substantial amount of risk. You could lose your entire account and maybe even more. So it's a good idea to consult with a licensed trade advisor. So real briefly, just to give you a little background of Right Line Trading and the company that I have the pleasure of working with. I've been with Right Line Trading for going on 10 years now. And going on 10 years, just recently, I wanted to show you a little picture I'm going to bring around. I just wanted to start out with the we call him the pioneer, founder of Right Line Trading. This gentleman right here in the middle is Mr. Mark Sachs. If you've heard any presentations before, you've probably heard Mark. He's been around a long time. And let me tell you, the guy's probably one of the smartest people I know. He has a PhD. He's a graduate in applied mathematics from Pennsylvania University. The guy is, I mean, a walking encyclopedia. If you ask him a question, sometimes some traders come out with questions on things that, to be honest with you, I've never heard of them before. I've seen people throw some questions at Mark, and he doesn't get stumped. He surprises them. And right off the top of the head, he'll know exactly what they're talking about. And I think it's almost with any subject you bring up. He's just one of those guys that's extremely knowledgeable. And he's been a kind of a mentor for me for the last 10 years. And I do owe him a debt of gratitude, not only for being a mentor, but also for being the founder and laying a foundation down for us at Right Line Trading. The trading systems that he helped develop are all based on mathematical modeling, and they're really powerful systems. That's kind of what our role is as software developers, is we want to help predict a future direction of price. Because let's face it, when we're at the right edge of the chart, we really have no idea which way price is going to go. So to develop a software system that's based on mathematical modeling that helps us predict the future direction of price is really our calling, our purview, so to speak. And the way we use that information, the way we leverage it to extract money out of the financial markets can be done in a variety of different ways. A couple of the ways that we do it here at Right Line Trading. At the very top right, pictured there is Mr. David Kushner. David Kushner is our prop trader. I didn't take a minute. Let me just make sure that everybody can hear me and see my screen before I get too far into this. Can you hear my voice, everybody? I know it's been a long day. Just give me a yay or a nay. Okay. Thank you, James. Thank you, Dundee. KC, John, Rodney. Just about 300 or 400 attendees out there. And I just want to thank you again. I'm really flattered that everybody took the time out of their weekend to come and listen to the presentation. Thank you for that. So what I was saying was the top right picture is Mr. David. Listen, it's an exciting time in trading. Things changed. These prop firms are now very popular. These companies, Apex, it must be 1 million clients that are all in the game trading, trying to get a fully funded account. We're in trading was for the wealthy. Face it, if you're struggling to make ends meet, you probably weren't risking, $1,000 on a day trade or a swing trade. So what these prop firms have done is they've kind of opened the floodgates, so to speak, and they've put everybody in the game for just pennies on the dollar, maybe a couple dollars. You can get yourself into an evaluation, a test account, and if you do well, before you know it, you've got $50 or $100,000 of leverage to play around in the financial markets with, and really keep a majority of your profits. So what David does, David Kushner, they have something called a trade copier that you can have multiple prop accounts, and with this trade copier, if you take one trade, it'll copy the trades to all 6 accounts. So that's what David does. He's extremely disciplined. Sometimes watching him is almost like watching paint dry, to be honest with you, because he sits on his hands and he doesn't overtrade, and he's very disciplined, and he waits for he waits for our software system, which does an excellent job of defining risk, tell him when the best time to take an entry is. So David uses our system, our software, in his live trading room. We call it our prop trading room, and he leverages our system trading those prop accounts. Down on the bottom right, David Wise, Mr. David Wise is part of the Right Line Trading team. David is a verified trader with the Reddit community. If you're not familiar with Reddit, Reddit is about 40,000 traders strong. It's a community of traders that all share ideas. David, if you ever go into Reddit, his name in Reddit is One Wise, and he dozens of educational articles that he publishes in Reddit, and you'll see next to his name is a green verified trader. It's a green emblem that you could see on his name. And what that's saying is they've taken the time to make sure that he's the real deal. That they don't want to publish articles from people who don't know what they're talking about, to 40,000 people. So they've gone through his performance with a fine-tooth comb. He's a verified professional trader. We are so pleased to have him on our team. David uses our software to leverage options positions, and man, is he good. When it comes to short swing trades or intraday trades, David has a winning percentage that's really close to 90%. So it's incredible. And he trades our Compass and Market Internals Dominator trading system. Then over here we have Mr. Craig Emery. Craig Emery is a project design manager in Las Vegas, Nevada, Sin City. And Craig has been trading for over 20 years. He had purchased our software. He probably spent 2 or 3 or 4 years in the room every morning with Mark Sachs. Mark has the masterclass modules, and if you haven't watched them, let me tell you, they're extremely comprehensive. Very detailed of exactly the indicator analysis, our trade methodology. It goes into great depth. Anyway, Craig Emery is one of those guys who kind of internalized those rules and puts them into practice. And like David Kushner, he's very conservative and disciplined, and he also waits for everything to line up. So he has his own trading room with Right Line Trading, and we have 3 great traders that morning, Monday through Friday, in our live trading rooms. Rob did a great job introducing myself. I just wanted to show you a quick picture. Just this past weekend, my wife, who's pictured right here, we have a 4-year-old, and we just had another baby. Heather is her name, and she was baptized last Sunday. So listen, we've been smoking cigars over here for the last 2 months. We're still, kind of in cloud 9 with the newborn, and it was a very special occasion. So I just wanted to throw that in. So I've been working for about 10 years. No, Sergio's been with us for about 8 years. Sergio Luque, one of his last names is Luque, so I like to call him Luque. And Sergio is a Cuban American. He recently got a citizenship. And let me tell you something, he has a master's degree in computer science. When it comes to writing programs, even the most complicated mathematical equation, the guy is smart. Let me tell you something. Um, he's extremely intelligent, and when it comes time to coding, he can make things come to life and sing and dance on a computer screen. And he is our lead developer. We just recently got him some assistance. We've got him actually a couple of people to assist him. We have Mr. Charles Steiter, who has 30 years of experience. He has a bachelor's degree in computer science. He's doing some development with Sergio and some tech support. He's also a trader and he trades our system. He has extensive knowledge of the inner and outer workings of our trading systems. And our AI prodigy, last but certainly not least. Now you can see Jacob on the bottom. It looks like this guy doesn't even shave yet. Huh? He's got such a great baby face. He's a college student. I like to call him our AI prodigy. And he's also helping Sergio and myself. And listen, I'm not sitting alone here. I've got a great team. We have a couple of other independent contractors that help us with the website and marketing. So we've got a great team here at Right Line Trading. And over the years, we've built a community of traders. We have our Discord chat group. And let me tell you, we probably get some of our best trading ideas from some of our members. I have the pleasure of speaking with, hundreds, if not thousands, of traders over the last 10 or 12 years. And listen, I just love traders and I love talking trading. It happens to be my passion. And we're all on this journey together. Mark Miller, who's our leader of our team, had just heard Right Line Trading from Mark Stack. And one thing I'd say about Mark Miller, um, he's an Army veteran. He's in this industry. He has transparency, honesty, and integrity that you just don't see in this industry. And those are the core values that he instills in everybody on this team. So we're very pleased that Mark Miller is the new owner of Right Line Trading. So let me go back into the slideshow. I think I jumped out of it. So let's keep the ball rolling. Our AI auto trader, listen, the reason why we put this strategy together, and I'm gonna go slow because I want I don't know, is everybody here familiar with Ninja Trader? Do you use Ninja Trader? Ninja, okay, is a futures platform. Yes, they have what's called the multi-broker license. I don't want to get too complicated, but they do have on their control center. This is their control center here, the ability to connect data feeds. If I want to trade Forex or stocks, I've linked my TD Ameritrade account. I have the Ninja Trader Continuum. I have a number of different connections. But Ninja Trader, listen, this is a powerful futures platform, okay? If you're going to trade futures, I highly recommend looking into Ninja Trader 8. Ninja Trader is a free platform now. Let me say that again. I know it hurts. If you're like me, you paid that $1,000 and you bought the license. But the good news is today it's a free platform, okay? The free version gives you all of the features. You can run the automation. You have the ATM or automatic trade management strategies. You have your strategy analyzer, your market scanners. A number of extremely powerful tools are now available free of charge, okay, by using the Ninja Trader 8 platform. The reason why we put together this automated strategy, and let's face it, I don't know if there's a worse feeling than blowing out a trading account. And I think we've all done it. I think every trader has. The reason, listen, we're only humans. And I say that because our emotions sabotage our trading. They sabotage my trading. I can't tell you how many times I've exited a trade too early because I have money on the line and the trade is going against me, or I might have taken $200 or $300 in profit and I want to hurry up and get it out of, get all the risk off, put that money in the bank. Or I might want to squeeze my stop and squeeze that trade too tight, only to get stopped out or exit the trade and see it continue 4, 5, 600, 1,000, $2,000 in the direction that I had initially placed my order. These mistakes are extremely frustrating. So these emotional errors, which I can really relate to. Also, listen, I've talked to hundreds of traders. They tell me that they've purchased indicators. I've done a number of screen shares and I've bought indicators myself. They just don't work. They sounded good. Mark Sachs used to say, I got seduced into purchasing this indicator. I listened to the presentation and I was seduced. Well, we've all bought indicators that don't work. Okay. So you're not alone. So having the proper tools, eliminating those emotional errors, and creating a system that has a proven methodology and a proven track record behind it. And that's what we've put together with what I'm about to show you. It's been my commitment really since the day I started at Right Line Trading to help traders out. And I'm really excited to be able to share it with you today. And I've got some brand new information that I'm going to be sharing. Stick with me. I just want to make the point, and it's kind of a rehash of where I started. As software developers, and we can all relate, looking at the right edge of the chart, and I tell you, this week personified this slide. You would think, now we're heading into this, debt ceiling crisis, where Janet Yellen says, we initially at the beginning of the week, we thought June 1st, might be the end of planet Earth as we know it. I mean, something catastrophic was going to happen unless these guys on both sides of the aisle hammered out an agreement. And I looked at the calendar and it was like the 25th, I think. So we had 5 or 6 days until doomsday. Now, anybody would have rationally thought that this past week was going to be a bear market. Okay, I know I did. I thought for sure that it was going to be a bear market. So what I did was I asked David Wise. David Wise, he's our options trader. And listen, this guy, when it comes to options and different strategies of how to extract money out of the market, this guy's a wizard. And I couldn't wait to ask him, leading into this debt ceiling crisis, which way to play the market. So I woke up early that morning and on Skype, I typed away on Skype asking him, listen, we got the debt ceiling. This thing is going to hit June 1st. Janet Yellen just said June, she extended it since to June 5th. But June 1st, we thought, the whole world might come to an end, God forbid. So anyway, I asked David, what type of positions can we take? What does he think? Which direction does he think the market's going to go, and what position should we take? And this is pre-market, about 8:30 in the morning. And I see the little wheel in Skype spinning, and he's typing away, kind of like on Messenger or on SMS text alert. He's typing away, and I can see he's, coming out with something. And He comes back and he says, I don't know. I don't know. He doesn't know. And that's, listen, all these talking heads, they don't either until the opening bell rings and the technicals line up one way or the other. We don't really know. And that's the point I want to make, is the system I'm about to show you, with all of the static that comes with these bars and being on the right edge of the chart. Once we enable that strategy and that bell rings, it's game time. Okay. This system can accurately get us into the right direction of the market. And I'm going to show you how. So the two things we need to create trading success, we need a system that can identify risk. We want to get in at an entry that has the lowest amount of risk associated with it. We want the highest probability that this trade is going to become a winner. And ideally, for myself, and I think I can speak for some of you guys as well, we've learned from experience that, listen, we sabotage ourselves, and it's not our fault. Don't beat yourself up. You're not alone. It's 95% of us, okay, that, emotionally we just make mistakes and we're humans. So ideally, we want a system, a strategy that can automatically get us in and out of these trades and maximize our profits, minimize our risk, and maximize our rewards. So why am I so excited? The AI Auto Trader, it happens to be the most advanced system that we've ever developed. We've kind of built on the foundation that we've started 10 years ago. This is, not something that's new to us. We've been developing automated strategies for going on a decade now, for a long time. And the system has evolved. And what I'm about to show you are the performance, the equity curve, the back testing capabilities. I want to show you the powerful indicators. Listen, this is not a black box system. I don't know. I, recently tried some of these strategy and I want it to work. And look to see his work. And looking at under the hood at their strategy, what it was looking at. I was basically enabling it and letting it take trades without fully understanding exactly what was going on. So there was a little bit of discomfort, I got to admit, with enabling that. So I'm going to show you what's under the hood. I want you to see it, and I want you to understand exactly how this system works. It does automate your entries, and it does manage the trades for you. Okay. So what are the benefits from using our system? Well, it resolves it. It's a solution to those mental problems, those mental issues that I've discussed earlier. The over trading, the overthinking, the revenge trading, the fear to pull the trigger, all those fears that come in to haunt us. This is the solution for that. It predetermines your stops and your profit targets. You're not going to be cutting your winners short or mismanaging your trades. So on this slide, what I like to do is I like to go to the chart here because I think the chart, seeing the chart next to the list of indicators is a bit helpful. So what I'm going to do is I'm going to open, this is the chart from Friday on the E-mini. Okay. So the secret sauce, what runs this auto trader? Why is this such a powerful system? This is why. What triggers a trade on this automation, on this automated system? It's built as a strategy in NinjaTrader, okay? Which is very simple. Once the strategy is loaded in your control center, the only thing left to do is enable it. So once you check that box off, that's all you have to do. And this system is going to wait until every single one of the parameters have been met. And I'm going to go over those parameters with you and the indicators that the system leverages. So it's extremely user-friendly. If you're a newbie, if you haven't done much trading, not only does this system give you a great discretionary component to learn trading, because you could see the entries on your chart, you could see where the system took a trade when everything was lined up perfect, and sometimes more importantly, you could see where it didn't take a trade, because over trading is really one of our biggest problems. So anyway, the secret sauce, what runs the AI auto trader? The market internals indicator. The market internals indicator, what that is the signal of it are these green triangles that you see pointed up, the triangles. And what that indicator is looking at is a disparity between uptick versus downtick. Okay. And it's looking at 5 different indexes. And when there's a tremendous disparity between uptick or downtick, in this case, when they're green, there's a huge abundance of uptick versus downtick. And it's also looking at some declining ratios. It's going to fire that green triangle. Okay. Why do we look at that? I'll tell you why. The premise of our entire trading system is to follow in the direction of large institutions. So who's creating that disparity between uptick and downtick? Well, I could tell you who's not. It's not us as retail traders. We're the kind of the small fish in the sea, the minnows. These huge amounts of money being dumped into the market or pulled from one asset class to the other are done by these huge hedge funds and institutional traders that have all the money. And the money is what drives price and creates the trend in the market. So what we're doing in essence is by tracking the disparity between uptick and downtick, is we're following in the direction of big money. Okay, that's simple. Now the background bias, what that is the background color of my chart is green. We don't want to get, I want to say suckered, so let me say it. We don't want to get suckered into a false breakout. Okay, we want it to be a confirmed trend on a higher time frame. Before we had this indicator that looks at multi-time frame, we would have had to open several different charts to see the higher time frames to make sure that we weren't taking a counter trend trade. So if we were trading a 2-minute or a 5-minute chart, we might look at a 30 or an hour chart, or even a daily chart if we were going to swing trade. These are short intraday trades, so if you're trading a 5-minute chart, you might look at a 15 or an hour chart. Just to make sure that the trend is in alignment on that higher time frame. And what we found is when we have this multi-time frame alignment, that our success rate goes up exponentially. The risk is decreased significantly when we have a multi-time frame alignment of trend. And that's what our background bias is doing. Okay. The next one is a little bit out of order, and I'll come back to the trailing stop. The other is our multi-time frame pivot. We have pivots and we have what we call our volume zones, which are really multi-time frame pivots. And we never trade into these areas of support or resistance. Price has a good chance of, listen, it might bounce, it might break right through a pivot. But listen, I've seen it time and time again that when it goes into one of these areas of support or resistance, it causes price to reverse. So we do respect the pivot, and our system knows never to trade into an area of support or resistance. So let's go back to the trade management. With our trade management, I'm going to show you the actual strategy itself. We've built in momentum-based trailing stop that are tied to our 15 EMA. This green dotted line on my chart is the 15 EMA. So we have a stop that will keep us in the trade until momentum wanes, and that changes colors and goes yellow or red. And once momentum wanes, it'll automatically exit the trade on your behalf. So we have the optimized order entry and exit parameters. We share with you our proprietary ATM strategies. We share with you exactly where to put your stop and where to put your profit target. Okay, so we know which instruments we're trading. The system is going to get in and get out for you, and everything is done automatically, completely automated. Now, I also wanted to bring your attention to the crosses that you see on my chart. These crosses kind of go together with the dynamic dashboard. And I don't want to overcomplicate things, but on the left here on the top left of my chart are a list of the conditions that must be met in order for the strategy to fire a trade. So if once all of those conditions have been met, then that green cross will fire off a cross on your chart, and that's the indicator. However, the same exact indicator is built as a strategy that when all of the conditions are met, it will fire a trade. So we have an indicator version that fires the cross, and we have the strategy version that enters the trade for you. So as a discretionary component, to have those crosses come up on our chart, is a real advantage. It's an advantage to go back and back test, and it's an advantage we can play with our settings and see where those signals come in and make adjustments to our settings. So it's helped us optimize our templates, and it also helps, listen, on a discretionary basis. If you're trading and for one reason or another you don't have your strategy enabled, but you see one of those entry signals, since we've also provided you with the ATM strategy, it would be as simple as just clicking on buy or sell on your chart trader here and executing the trade by yourself. Okay, so that is a feature that comes with the trading system. So I'd like to, because all of the indicators come available on the charts. Normally we have a discretionary system that we trade for discretionary trading, and then we just have the strategies that we set up and enable just for automation. However, for Traders Corner today, we're going to do something very special. We're going to do a 2-for-1 special that I'm going to go over in just a few minutes. But before I get to my special offer, I just wanted to show you very briefly the strategy parameters and some results of what we've been getting. So before I go into the backtest results, I just wanted to show you the backtest results that I'm going to show you. Listen, it's not the end all be all. Okay, they're not 100% accurate. You can see on the left our accounts taken in a live money account. We trade all of our strategies on a live account, and that's what you'll see on the left. You'll also see on the right, side by side, through the strategy analyzer, which is the backtest, of the same data. And you can see they're very similar, almost identical, but I don't know if you could see the numbers, but here it says 0.75, and here it says 0.25. So, there's a little bit of slippage that you're going to get in a live market environment. In an ideal market, in an ideal world, where there's not market makers and slippage and the whole dog and pony show that goes on, horse and pony show that goes on in the background of creating a live market environment. There's a couple of ticks that there's a differential, and I just wanted to make that that fact known. So let's go now to let me go back So I'm going to go real quick, and we're going to run through some tests that we did, some results that we had on some of our strategies. Now, the strategy parameters you're going to see here are going to be, and this happens to be the ES on a 5-minute. Okay, the ES on a 5-minute is the strategy that we're running. The strategy parameters, we're looking at the market internals, and we look at it on a higher time frame than our trading chart. Okay, in this case, we're looking at it at a 34 range, which happens to be a fib number. For mathematical modeling, the way Mark developed the system, there's a lot of fib numbers that come into play when it comes to our settings of our indicators. So the market internals are looking at a 34 range. Our background bias, which was our multi-time frame assessment of trend, is looking at our 5-minute, a 34 range. It also looks at another higher time frame, a 55 range. So there's kind of a triple think time frame when it comes to executing these trades that are based on fib numbers. So we never trade into the areas of support or resistance, and that's what these volume zone and pivots are. You can see here that in the parameters of the strategy, and a lot of people ask me, hey, Rory, can I trade a prop account with this strategy? The reason why our prop traders are having such great success with this is we have the ability to cap off our loss for the day. So we're not going to be taking big drawdowns. Once this strategy loses $375, it's going to automatically stop trading for the day. On the flip side, if the strategy makes $750, it's also going to stop trading. So depending on what your risk tolerance is, you could fill in the blank as you see fit. Okay. I put mine at 375 and 750, kind of a 2-to-1 for this example. We could put in our trading hours. You could trade 24/7. A lot of people ask me, can I trade during the European session, the overnight? Yes, you could trade 24 hours a day if you'd like. We like to trade during the New York Stock Exchange when the stock market is open, the New York stock market. So we trade between, and it's in military time, between 9:30 and 4 o'clock Eastern. Now, under the parameters here, the global parameters, we have the conditions that must be met in order for our strategy to fire a trade. I already mentioned a lot of these, the market internals, the background bias. We have a volume threshold where it prevents us from taking a trade in a low volume environment. If you are somebody that likes to trade overnight, there's certain hours during the night that the volume is very low. And then you get these big bursts that drive price one way or the other. So we can put in a volume threshold. What we've done in the past normally is around 400 contracts per minute. So until there's 400 contracts per minute crossing and we have a burst of volume, that condition would not be met if that were checked. Okay. So we always respect market structure. On my trading chart, you could see we had the moving averages, our 15 and our 50. A rule is our 50, in order for us to take a long trade, our 50 would have to be green and sloping up, and our 15 would have to be above our 50. See, the whole thing with these automated strategies is staying out of the losers. And I can't tell you how many times I've heard Mark say it. Our job as traders is not to get winners. And that's what, I would think. Our job is to get winning trades. But no. What kills us are the losers. So we have to filter out all of the trades that have risk associated with them. For us to take a trade without the multi-time frame assessment of trends, without the market structure, the 15 being above the 50, to have them both planted up, without those market internals, which kind of gives us a finger right on the pulse of the market. Without those criteria, listen, it's a flip of a coin. It's a crapshoot, and that's not that's not what we want to do with our hard-earned money. We want to get in when there's the least amount of risk associated with our trades. So that's a real important component. A couple of others are the MA diff. We define how far off the 50 that we want to trade. The market always has a tendency to revert back to the mean. You could see on Friday when the market opened, this thing took off like a shot out of a gun. It went straight up. Our system was all over it, all over it. On a 5-minute, on a 15-minute, it gave us incredible signals. Be that as it may, what happens is once it gets overextended and the market becomes overbought, price has a tendency to revert back to the mean. It didn't happen much that day, but if we go back to a previous session, you probably see examples. Well, here we are heading into an area of support or resistance, and our strategy would only take that entry if it had room before this area of support or resistance to hit our first target. So what I'm saying, what I was getting at is the MA diff prevents our trades from executing in an overbought or oversold environment. And coded right into the strategy, we have our APM, where our profit targets are, where our stops are. We could pick whatever instrument and time frame that we want to trade it on. So this is the result of the ES on a 5-minute from from May 1st to May 26th. And you can see that it does not take that many trades. It has a 2-contract strategy. So we're looking at a total of 19 trades for the month. So I guess on average, it's a couple of trades a day, 2 or 3 trades a day. So, you're not, if you're trading a live account, you're not going to pay your broker's mortgage off in commissions. 38 trades is not very much, and a 60% win rate. Okay. What stands out on this result is our risk to reward. Our average winning trade is $240, and our average losing trade is $165. So we're winning much more than we're losing. And listen, that's always a huge problem. I can't tell you how many times I've traded the futures, even options, and you get a few winners and you're feeling great and you're feeling almost unstoppable. And the next one, you take a big fat loser and it wipes out, all of the profit that you did such a great job getting. It's completely wiped out with one bad trade. With this strategy, I wanted to emphasize that we're winning much more than we're losing on this 5-minute strategy. And my trade performance for this week on that 5-minute template, was very similar to what it was all month. It was 3,000. Well, this is actually a combination of my 5-minute on my NASDAQ and my E-mini for the week from the May 22nd to the 26th, trading the 5-minute strategy template on the E-mini and the NASDAQ. I was up $3,000. Okay. And that's an actual trade performance on a live market. So that's the 5-minute on the NASDAQ. I'm sorry, on the E-mini. You can see our analysis. Our equity curve is a really nice equity curve. One little drawdown here, I think, of $200 or $300, and then the rest of the month, it had a few peaks and valleys, but it was a nice positive equity curve. And our trading chart, it shows us exactly where the entries were. This past Friday, it just, crushed it with those market conditions. This system can run up the score very quickly for you, which is always very nice. So let's go over just a couple of more, and then I'm going to go over our special offer for Memorial Day. I wanted to show you let me see here. I have a 15-minute strategy. We have a 15-minute strategy. This is a 15-minute strategy that we ran this from January 1st to May 12th. Okay. Year to date, it took 80 trades. This one wins 75% of the time. The 5-minute chart on the NASDAQ, the reason I like it, if you're here today and you're actually running these strategies, I'm glad that you're listening to this, because the reason I like the 5-minute or the 15-minute template is they don't get caught up in that static. They don't overtrade. I'm going to show you the results of the 1 minute, and although they are positive results, it takes a lot of trades on a 1-minute chart. So my personal preference, I kind of like the 5-minute and 15. If you're somebody that likes a lot of action, the 1-minute chart the 1-minute strategy then is right up your alley. But this is the 15-minute, and you could see our summary here from year to date. Our risk to reward is really right about the same. 1-to-1, where our average winner is 324, our average loser is 313. And you can see this beautiful equity curve. It just goes straight up. Okay, on 80 trades for the year. 80 trades for the year. And then we could see the actual trades that it took right on our trading chart. Okay. So I did mention a 1 minute, so I am going to show you a 1 minute. And then we'll get to the special offer and answer any questions that anybody has. The NASDAQ on the 1 minute. I just wanted to mention one thing. I'm doing very recent trades, and the reason I'm saying that is I've seen back tests of people that do them for 5 years, and listen, on this futures data to go back that far, come on. Unless you've got a ton of data saved, these contract months only have so much data. So these are very recent results from March 1st to today. Okay, just a couple of months. In that couple of months, this system took on a 1 minute 200 trade. Okay, 200 trades. You could see the winning percentage was quite high. It was 75%. And you could see our equity curve, very nice equity curve. And then our trading chart that plots the executions. Let's scroll back some and see if we can find any. But you can see the beautiful signals that it gives you. I mean, even if you're going to trade these on a discretionary basis, these crosses that come up on your chart, remember that signal indicator, that's telling you that all of the conditions that are in this strategy have been met. Now, if you didn't have this, this is kind of to put things in perspective. Without an automated strategy, and the reason why, I'm a very inconsistent trader, and I've blown accounts in the past, is if, listen, trading the NASDAQ, we all know it can run like a Ferrari, like a Lamborghini. It's a very fast moving market. And to calculate in your mind, am I headed into a pivot? how far off the 15 is it from the 50? Do I have this color? Is everything lining up just right to where risk is at its lowest point? And I'm making all of these split second calculations in my mind before I enter a trade. And I know once I pull that trigger, if I take a loser, it's going to cost me. There's going to be some pain involved. So to have this tool, this extremely powerful tool, let me tell you, it's a real game changer. And it's been a game changer for me, and I know it'll be a game changer for you as well. So before I get to the special offer, well, let me keep going. I don't want to take a lot more of your time. We are going to do something very special for Traders Corner. We always like to give our best offer during the Traders Corner event. And today being Memorial Day and Traders Corner, what we're going to do is we're going to do the 2-for-1 special. We want to keep the integrity of our system. We don't want to have 1,000 traders all trying to get in at the same price. So we do limit the number of systems that we make available for every month. And we are going to offer the 25 systems for this special offer. And what we're going to do is not only we're going to offer a discount code. The discount code for the monthly is save $100. Save $100. That'll give you a monthly subscription of $2.99 per month. If you want to do the annual subscription, which is, you could do the math, it's by far the best value. Apply the coupon code save $500. And I've asked Rob to put the coupon codes and the link in the chat box, and I see that he's done that. So for the annual option, if you click save $500, that's going to bring the annual price down to $19.97 per year. So I think it comes out to, if you divide 12, I don't know, about $150 or $160 a month with the annual option. So it's really by far your best value to go with the annual at $19.97. You would use coupon code save $500. But we're also going to throw in some goodies. Not only are you going to get all the additional markets that we continue to add on and additional time frames. We've got some 30-minute template coming. We're also going to be releasing some of the commodities with crude oil and gold. We've been testing a number of strategies on those as well. So you'll get those additional markets. And I also wanted to mention, we have a phenomenal Discord chat group. This is our Discord chat group. If I go into our AI Auto Trader, we have our general chat where all of our members can talk about the execution, the strategies that they're using. As a community, you wouldn't believe how everybody helps one another out. We also have 3 of our staff members that are in the Discord. Sorry. We have 3 staff members in Discord. If you have a problem, you would type it in here, and we have Charles and Jacob and Sergio that are always available to assist you, which is huge when you're dealing with software. I mean, how many times have you had a problem, with your trading platform or NinjaTrader or one of your indicators, and you try to get a hold of the company, and it's like it's almost near impossible. That's not the case here. We've got a team that is readily available. In fact, if you decide to come aboard today, and I hope you will, when you do click on that link that Rob put in the chat button and you fill it in, you're going to get instant access. Okay, your subscription's not going to start until Tuesday, until next week. So don't worry about getting in now. Your month or your time it actually doesn't start until the market's open and you're licensed and up and running. Okay. So don't be afraid to get started today, knowing that it's a long weekend. Be one of the first 25. We've got several hundred people here today. And I want you to get to be one of the first 25 because you're also going to get the discretionary system, which is huge. All of the chart templates with all of the indicators on your chart that I showed today are going to be provided to you. We're going to set you up with the entire workspace. So you'll have all of the pre-formatted strategy templates, all the pre-formatted chart templates, and the workspace. So once you check out, you're going to get instant access to those zip files, and you're going to have immediate access. We're going to get you set up, and you'll be trading with us come Tuesday morning. Okay. So you're also going to have access to the Discord chat group. You're going to get all the additional markets. You're also going to get tech support, the white glove installation. Now it says here that the offer expires Sunday. That's wrong. The offer expires after Memorial Day, Monday. Okay. I don't want anybody to feel rushed or hard pressed because that's not the case. I want you to feel comfortable. This is the start of a relationship. And listen, I know traders in this room now looking at the names that I've known for years, and I consider them my personal friends. So if you have a question, and I'm about to look at the questions, Rob, you got to give me 5 minutes to do the questions. If I don't get to all of the questions now, put your name and your number in the questions box. Okay. I hear a couple people starting to call in, and I will get back to the calls as soon as I'm done, and I'll call you back. But if I don't get to your question, if you type your name and your phone number in the questions box, I will follow up with you over this holiday weekend and answer all of the questions so you're 100% comfortable and all of your concerns have been addressed. So with that being said, let me take a quick look just to see if anybody had a question. I started at 3:45. So at 4 o'clock, I got some yeses. Yes, Peter, we are going to send out a replay. As soon as Traders Corner, actually I've used Snagit, so I'll have the replay out this afternoon. Dr. Don, yes. Hey, Don. Yeah, TD Ameritrade, yes. With that multi-broker license, we have the ability to pull up stock. So if you're somebody that likes to trade stocks and options, using this system, that 5-minute chart on the ES or the NQ, and you want to take an options position on the Qs or the SPY, having those signals is really, I'm telling you, David Wise will attest, those market internals are, his win rate goes up to like 93% when he has that in his favor. So TD Ameritrade is a connection that you can make, and this system will run on that data. So here's a question about Apex. Andrew asked, for the Apex eval accounts, you're able to make the full size contracts work versus using micros to control drawdown? That's a great question, Andrew. Give me just a second. I'm just going to take a sip of water. Okay. What I've found is with the Apex accounts is being very conservative using the full E-minis, I think is a better strategy. Unless you're going to trade multiple micro contracts. I think, and listen, I'm not a licensed trade advisor. I'm just somebody who's very familiar with this system. But our prop traders are succeeding by trading the higher time frame templates. Okay, the 5-minute, the 2-minute on the Russell, the 5-minute, the 15-minute on the NASDAQ and the E-mini, and sticking to their daily loss and profit target. They won't allow a big drawdown and they'll stop trading. So that would answer your question. Norbert asked, can the system work in Africa? Good question. God bless you out in Africa. Welcome. Absolutely. As long as you have a live data feed and you have NinjaTrader 8, it doesn't matter where you are. This system will work. Norbert, I see that you left your country code and number. If you have a Skype or a WhatsApp, I just don't have the ability to call Africa from this phone here. I happen to be at my house today, but if you give me a WhatsApp number or a Skype number, man, I would love to speak to you. Here's one from Alex. Last question. What data feed is required? Futures and equities as with Dominator. Well, if you're going to trade, that's a good question, Alex. And Alex is asking me about the data feed. You know, I'm somebody who likes to keep things simple. The less moving parts, the better. So for my futures, I've opened an account with NinjaTrader Brokerage, and I've subscribed to NinjaTrader Continuum, which is all I need. For a nominal fee of $12 per month, I can subscribe to the data feed. I think it's the CME bundle, and it provides me with everything that I need. However, if I want to trade stocks, okay, that's going to require another connection. Okay, Alex. So for futures, you'd be fine with Continuum. For stocks and options, you may want to consider IQ, Kinetic, TD Ameritrade, any connection that you can establish within NinjaTrader that provides you with stock data. I know Forex data can also be connected. We have a lot of Forex traders as well. Okay, Norbert, thank you very much for the Skype number. Well, I want to respect everybody's time, and I know it's been a long day. Thank you for sticking around and listening to this presentation. And really, I really, it's my hope and strong desire to trade along with you next week. And I say that not because I want to get a sale, but I say that because I want you to be successful. And if you know me, you know it's true and it's from the heart. And God knows it's from the heart. My number one goal is to make money. That's what we're in this game for. So I have a really great feeling that if you come aboard with us and you take advantage of this special offer, just like it did for me, it's going to be a game changer for you. So with that being said, God bless everybody. If you're a veteran or you have somebody in your family that served, God bless you. God bless this great country. Enjoy your Memorial Day weekend, everybody. Thanks for having me on Traders Corner, Rob.
Thank you, Rory. Your strategy looks amazing. I can't put into words how impressed I am with the way that it automates everything. We've been hearing the strategy's been crushing it. You've shown the back test to prove it. Ladies and gentlemen, if you struggle with human error, over trading, inconsistent results, and blowing out trading accounts, then Rory Powers over at Right Line Trading has a solution for you. You can learn more by clicking the link in the chat box. I also pasted the coupon codes for him. Thank you again, Rory. We hope to have you back here on Traders Corner. Ladies and gentlemen, that'll conclude our special Memorial Day event. The staff at Traders Corner wants to thank all of you for joining us today. It's been an information-packed event, and we hope you enjoy the rest of your holiday weekend. Have a nice evening. Thanks again for being here. All the presentations will be posted to our YouTube channel probably by tomorrow afternoon, but please give us a little leeway if not, being the holiday weekend. So long.